First need to fall.
Yeah, and that picture actually is a little muddy, to be honest, if you look at the jobs data in a more granular fashion. So let's set it up for you and what's happening globally first before we come to what the India setup looks like. To start with, it was a rough Friday for Wall Street, no doubt about it, because weak economic sentiment, weak August jobs has pulled down US markets as growth concerns return. Worst closing for S&P 500 since 2022 in a week. For NASDAQ as well. All of those key indicators down. Mega cap tech stocks have really taken a beating. So whether it's an Amazon, an Alphabet, all of those, in Nvidia, all about 4% down in trade on Friday. So let's go into that jobs data and tell you what really has led to those concerns. And this is the second month in a row where the monthly jobs data is a problem. So in August, jobs in the US grew by 142,000 versus expectations of 161,000. This is non-farm payroll jobs. So that means it excludes agricultural work and some certain specific jobs like in the military, etc. It's grown at a much lesser rate. Remember, there has been a revision of the previous month's number as well with it. An unemployment figure also comes in at this point, which is dropped actually from 4.3% to 4.2%. This is in line with expectations, so this was not bad. The average hourly earnings is also been decent. It's risen by 0.4%, bringing average wages per hour in the US to $35.21. So if I look at these 3 or 4 factors, the top line jobs data definitely negative. The other two were okay. So I would say that the word is still out, or the decision is still out on whether we see a 25 basis points cut or a 50 basis points cut from the Fed chief in just a few days from now, and that will perhaps swing one way or the other. Treasury yields in tandem really and reacting to that job data. So the 10-year fell to 3.71%. Gold has also actually come off its highs because of the kind of slightly mixed view coming out of jobs data. Crude prices, after a complete hammering, has recovered a bit. So Brent is about $72 a barrel. It's climbed 1% after a massive hammering on Friday. So this morning, at least, there has been some recovery. Asia is a different story. Asian markets have opened weak. Look at the Nikkei, down nearly 2%. The reason is the kind of GDP growth in Q2 that Japan has shown. And this has come in much lower than expected. So that has been a big hit for the Nikkei. Implied open of India, let's just take a look at that very quickly before we move forward to what Reserve Governor Christopher Waller said. Your implied open is indicating a weak start, 61 points down, thereabouts, but not massively painful is all I could say. But meanwhile, the Federal Reserve Governor Christopher Waller said that the recent jobs data requires action, hinting that the time has finally come for the US Fed to start cutting rates. Listen in.
But the current batch of data no longer requires patience. It requires action. Today's jobs report continues the longer-term pattern of a softening labor market that is consistent with moderate growth in economic activity, the details of which I will get into in a moment. As I said at the outset, considering the progress we have made on getting inflation back to target, I believe that the balance of risk is now weighted more toward the downside risk to the FOMC's maximum employment mandate. While the labor market has clearly cooled, based on the evidence I see, I do not believe the economy is in a recession or necessarily headed for one.
Seth R. Freeman is joining us. He's Managing Director at B. Riley Advisory Services. Seth, great to have you on the show. While we try and break down the picture coming in from the jobs data, is it fair to say that while the numbers itself have disappointed the street, but when you go into the details, it's not necessarily yet pointing to a very big slowdown in the US economy? Is that how you're reading it?
You do have to stratify the numbers and look at the different, the makeup of the index. The real issue, though, is that we should probably be expecting this with the summer. It was, August, July, and it was better than the previous month. So it's not looking like a slowdown per se, but there's other pressures consumer spending and consumer credit is getting pushed about as high as it's been in a long time, and consumer spending is very low, and this is going to have a real effect on the U.S. economy.
With the current backdrop and all eyes on the much anticipated rate cut by the Fed, in your opinion, do you think it's going to take the Fed to cut rates by 50 basis points to bring the risk-on trade back in fashion?
Well, this is the big question, and whether they're going to go with 25 basis points or 50, there's a lot of guessing and postulating about that. I think the Fed's going to be conservative and just look at a quarter point, 25 basis points, and then see how it's looking for the October meeting.
I mean, and unique circumstances of 2020 when the economy was shut down, usually the Fed has not done 50. So if the Fed doesn't do 50 and does 25, as you said, and remains conservative, is that a negative for risk assets? Because markets currently are worrying about growth. But if growth was not a worry, then the Fed action wouldn't have happened, and that might also have been construed as a negative. So my question is, if it's only 25, is that going to be negative for equity markets?
I think it will be fairly neutral, because I think a lot of this has already been priced in, and we've been seeing these movements in the market. Although it's the S&P has reached some historic highs over the last couple of weeks, I think a lot of it's priced in already, frankly.
Seth, just in terms of emerging markets impact, what is your assessment? Because the indications right now is that, at least as far as the US economy is concerned, the pain will continue, and then of course we'll see what the Fed rate action is. But what is the flow through as far as emerging markets, especially like India, are concerned?
Yeah, the pivot is always higher growth rates and the impact of lower US rates on currencies. And I would say that this is probably positive, and I'm constantly positive, I guess, about emerging markets and India. But we still have to look at country-specific situations. For example, the real estate industry in China is a disaster, and that's going to have a big overhang in the Chinese market for quite a long time, in addition to basic political problems. But I think this is quite favorable for India. The one thing, though, that hasn't been talked about too much is, should Trump win, and should he begin imposing the kinds of sanctions he's talking about, what the impacts might be both in the U.S. and for exporting countries?
We've talked about risk assets. A quick word on gold. It's up 20% for the year. The much expected rate cut is only a few days away. Would you go long on gold at current prices, expecting further gains? There is some consolidation that we're seeing right now, so opportunistically, it could be a good trade.
Well, lower interest rates is generally positive for gold because it costs money to own gold. So I would say that we're probably long, yes, for the long term. In the short to mid-term, I think it is positive for gold.
Right. Thank you very much, Seth. Great chatting with you. Positive gold, risk on trade is the word on the street, but the big question is whether the Fed will give the eternal bulls a 50 pips rate cut, which is most expected and would be appreciated at this stage. For now, while the cash markets did end lower on Wall Street and overnight on Friday's trade, the futures, at least for now, are indicating to marginally higher start this morning. Well, a quick check of what happened on D Street. It's been a good run. We've had a very strong run for the last 14 days. It was the very first time in 4 weeks that the Nifty ended the week with cuts, down about 1.7% to be precise. So after consolidating at higher levels, it was very obvious the bulls struggled to remove levels of 25,300 on the upside, and then of course sold off over Thursday and Friday's trade. Well, for the week we were oscillating in a fairly tight range of 553 points, but finally closed the week at the week's low points. Only about 14 points out of the week's low is where the Nifty ended. Clearly not comforting for the bulls. The VIX has also gone up, which is again a concern. For levels of 15 makes the bulls rather uncomfortable in terms of trade. The broader markets were okay. They didn't do as badly as the benchmark. In fact, the small cap index went home flat. The mid cap index outperformed the Nifty, down about 1%. Surprisingly, till Thursday, it was banks that were outperforming the index. Come Friday, you saw a big sell-off on banking names, and banks actually went home with bigger cuts than the Nifty itself. PSU banks were worst hit, down about 3%. The losses started with SBI on Friday morning, and then there was a trickle-down effect across not just PSU banks, but some of the private sector banks as well had it quite rough in trade. Well, apart from that, IT as well couldn't keep itself together, so anything global-facing sold off. Metals had it rough. Energy stocks also declined with the whipsaw trade that crude prices have seen last week. So it's been a tough week, but it's also been a tough week after 14 days of consolidating at higher levels. I think 25,300 on the upside was a challenge for the bulls, but I think on the downside, 24,900 is where I've seen maximum call writing. So that really becomes a little bit of an intermediate base.
Yeah, and put OI at 24,800 as well on the Nifty. I mean, such substantial open interest exists there. So actually, I mean, while we saw massive selling, and that's the part of my trade setup, massive selling in banks, led predominantly by PSU banks, because those are really succumbing to some bit of selling pressure.
It was an SBI story. Friday was in large
through the week, PSU banks have been real underperformers, and therefore banking large is not quite able to
But Neeraj, this is where I am getting stuck, right? All through August, we were hoping that banks play catch up. I mean, forget playing catch up. They've become stark underperformers.
Yeah, they have been.
The story up until August was PSU banks. It wasn't private sector banks. But what we are now seeing is even that segment of the market that was holding itself together is now letting way.
I think the Q1 results and the details are sinking in, that there is an inherent issue, and that's sinking in. Just before Neeraj, you come in with the trade setup, just what the fund flows were on Friday as well. Let's add that detail, because you know, the question now is that are you going to see at least foreign investors come in and add bulk to the market? No signs of that yet, if you look at the data through August as well. But on Friday, 621 crores in sales, and domestic investors buying about 2,000 odd crores. I reckon one of the things which will also be playing on the market's mind is how hot the primary market is right now. Some attention there, and I suppose GST is the other big story this morning.
Yeah, such expectations. So I think tomorrow GST will be a big one, but we'll of course talk about GST a bit later on at 8:40 today. Just setting it up for you, so that when the decisions come, you are ready for it. But what's the trade setup? To my mind, I mean, like I said, broad-based selling in banks, with PSU banks leading the charge downwards, not looking all that great. The next Nifty support is at the 24,800 strike, which holds substantial put OI. So our put writers betting on this level not being broken is the key factor out here. Let's wait and watch. It's just a few points. I mean, if the implied open is to be believed, then very likely that we'll actually start somewhere around those levels. So we're starting very cautiously around the maximum put OI level. Let's wait and watch if we bounce from there. Is it a good level to start accumulation, and our bounce backs likely? Well, if you look at the Nifty PCR as well as quant indicators, they all point towards the possibility of a bounce back later this week. The PCR has fallen dramatically from the levels of 1.41 that it was at, and usually PCR coming off tends to show that risk off, but also tends to show the levels from which the index usually bounces back. So keep an eye out for that. And if that were to happen, I think most people are now saying that if you want to play trading bounce backs, don't go out and bet on defense, don't go out and bet on shipbuilding, etc., or autos for that matter. The pockets to bet on are OMCs, consumption, and pharmaceuticals. Those are the buckets which are seeing fresh flows from the dealing rooms, and therefore that's a bucket, or those are the set of buckets that you brace yourself for a bounce back. Not defense, not autos. In fact, Guys,
not defense, but defensive.
not defense, but defensive. Yeah, you're right. And maybe even IT, because Manav Chopra recently wrote out a note wherein they have been bullish on IT, and they're saying that IT may actually lead the rally. Even Morgan Stanley last week mentioned that,
If
right?
they
That
not
IT could
already
be a big
have.
one. Yeah.
I think also, I mean, of course, I'm just playing devil's advocate here, but it could be that we may remain volatile ahead of the event. That will also give an opportunity for traders to come in, right?
Yeah.
Because unless you go long, you've got to be long at levels which are acceptable in that sense.
Yeah.
But of course, while you might have open trading positions in very risky verticals, of course, Neeraj highlighted what you should be trading on. Others believe that if you're long sectors like metals, you're long sectors that of course have been very volatile in the last few days, the pullback should be used as an opportunity to maybe cut your losses. So be a little mindful of that. While you're initiating fresh longs, Neeraj has highlighted where those longs should go. But if you have long positions either on Bank Nifty, PSU names, or also on metals, please treat the current pullback as a good time to take off or cut some of your losses. Of course, this is for very near-term traders, right? A couple of months out is not what we're talking about.
Yeah.
Well, let's move on from the market setup to stocks to watch. But before that, a check on implied Nifty. Asian markets are lower. Taman has already highlighted that for us. And it's looking like a weak start. 58 points lower on the index. An opening sub 25,000 is what we should be expecting. I have a handful of stocks. I'll start with that. The big story, of course, is going to be that much anticipated Bajaj Housing Finance IPO, which we'll talk about in a minute. But Mazgaon Docks, while we've told you that defense stocks may be under pressure, Mazgaon Docks could see some buying. The stock was down 4%, but the news is that they've bagged a rather significant order from ONGC to the tune of 1,486 crores. So this could be one counter you want to track on back of that order win. And of course, track the rest of the sector because shipbuilders usually move in groups. The other one that caught my attention is SpiceJet, and it seems like they're working really hard to resolve the financial crisis and the unstable operational setup for SpiceJet. This time around, they've cracked a deal with Carlyle Aviation to convert their dues to equity. What they're going to do is they're going to settle some part of the dues to the tune of $137.68 million. It's a restructuring deal which will give SpiceJet some breathing space, and also the fact that it gets converted into equity, it seems like it could be a far more stable sort of agreement that they have with Carlyle. The finance cost also will come off significantly for SpiceJet. The other news a few days ago, which we also very exclusively broke on this channel, is that the promoter, Ajay Singh, could potentially be looking to offload up to 80% stake in this QIP as part of the fundraising plan in order to fix the house at SpiceJet. So watch this one out. It should be an important trigger for the strong. Another one, I don't know whether it's a positive or a negative, but definitely an update, is Ola Electric Mobility. The 1-month share lock-in period for Ola Electric Mobility ends today. After today, of course, 4% of the outstanding equity will become eligible for trading. Newama says that just because it's eligible for trading doesn't mean it gets sold. What we really mean is that now that 4% additional equity can freely be traded, not implying at any stage that it's a sell or that 4% equity will be sold, but significant to note. So I think those are the three stocks, Mazgaon positive, SpiceJet positive, Ola, an important news update this morning.
Yeah. I'm focusing on the GST kind of impact that you're seeing for the first round of stocks, because I think that will be top of mind. Now, the last few GST Council meets, to be fair, have promised a lot, have overpromised and under-delivered from the point of view of market expectations. But the kind of commentary that has come in from the finance minister last few days does indicate that you might see some relief on life insurance, if not health insurance companies. And this is what I'm talking about. So among the other things that they're talking about in the GST meet this time is a review on insurance premium, both for health and life insurance. I think there's a consensus now that to charge 18% GST on something as basic as insurance is not a great idea. The question is whether states will come on board with losing that revenue and whether companies will actually pass it on. So that's going to be the debate. Potential movers you could see is, of course, your LIC, HDFC Life, ICICI Pru, SBI Life, New India Assurance, that entire pack, which has been buzzing a fair bit already. This clarification for payment aggregators could have an impact on at least Zomato from the listed world, because the council is talking about adding an 18% GST for payment aggregators. And, of course, the likes of Pine Labs, Razorpay, Google Pay, PhonePe also gets impacted, but Zomato might get hit as well. So that's another bucket that you need to look at when you're talking about GST. They're also going to be, the whole online gaming thing that keeps coming up every council meet as well, but that could be on the table as well. So Nazara, Delta, Zensar are some of those stocks that you need to look at. The other one that we should see is Godfrey Phillips. So now Godfrey Phillips, we know that behind the scenes there has been the fight within the family, the mother and the son. Samir Modi, the son, has effectively now been ousted from the board. On Friday, they decided, the board with a 75% majority has decided to appoint Beena Modi once again as the MD of Godfrey Phillips. Charu Modi becomes executive director. Samir Modi is out. The reason I'm saying that this could be a thumbs up is because for the street, any resolution of this sort is a sigh of relief, and that stock has already been completely on fire. So could see a further run up. HUL is the other one. So again, this was something which was in the works because earlier this year, the parent company decided that they want to hive off their ice cream business. Hindustan Unilever was expected to follow through, and now the company has formed an independent committee to evaluate the prospects of the ice cream business. The parent is anyway wanting to demerge that entire business by 2025. In terms of actual contribution to revenue, it's not massive. It's 3% is the ice cream business for HUL, roughly 2,000 crore rupees. And the key brands, of course, Magnum, Quality, Walls. But sentimentally, it could be a thumbs up because, you're value unlocking possibly. And also on a day when defensives are going to be in focus, then maybe an HUL with this kind of a boost sees a bit of a thumbs up. So yeah, those are some of the stocks I'm looking at.
I'm watching out for Lupin in the session today. Pharma is in news, and Varsha will highlight some of those, but I think the big one, Lupin, is interesting because an innovator company has appealed against a US District Court's verdict on generic Gynark. Now, the appeal poses a fresh uncertainty over Lupin's generic Gynark launch. Now, why is this generic Gynark so important? I'll use the Citi note. Citi maintains a sell on Lupin with a target price of 1,700. They say that the company's, which is Lupin's generic launch in April 2025, now will become an at-risk launch. What does this mean? It's an at-risk launch generally means that the market share remains low for the company which is doing the launch versus a normal launch. And Citi says that Lupin may also decide to delay the launch instead of doing an at-risk launch in April 2025. The importance is because generic Gynark contributes to 30% of Citi's FY26 EPS estimates. Now, some others may have a slightly smaller or a slightly higher number as far as earnings estimates go, but numbers could largely be between 20 and 30 or 40%. So therefore, it's a material contributor to FY26 EPS. And because there are deviations there, I would reckon that Lupin could actually see a bit of a corrective move today. So do watch out for that one.
Just on Lupin, I just found it astonishing that from one rug, Citi is expecting a 30% contribution to revenue and goes on to say that they have nothing else exciting in their pipeline apart from this.
Yeah.
So that, highlights the kind of massive risk generic companies take, because the innovator can come anytime, even if they don't win the case, they tie you up in litigation for a really long time.
Yeah, and especially in such a big drug. Yeah. I mean, because it's such a material drug for Lupin, it is it really an important one.
It helps stop kidney failure, so an important drug as well.
Yeah, so that's one. Deep Industries is the other one, has gotten a letter of award for 1,402 crore project from ONGC, so do watch out for this one if indeed it reacts. Remember though, an illiquid stock or not a very liquid stock, usually, yes, the volumes were very high recently, but be careful with the volumes piece, but should be interesting for this stock today, could be a positive. And watch out for Persistent Systems. A lot of people turning constructive on IT, right? Motilal Oswal's note on Persistent is interesting. They reiterated a buy with a target price of 6,300. Everything else notwithstanding, the last line in the note which I've given is interesting because they estimate an 18% US dollar revenue CAGR over FY24 to 27 for Persistent Systems. If they manage to do this, well, the high valuations might just stick. So do watch out for this one in the session today. And I dare say, watch out for the primary markets, because there is, before we get to the IPOs that are opening, Tamanna, Gala Precision Engineering lists today, issue price of 529, massive subscription. Yes, it's a tough day today for markets, but could see a very interesting listing, this one, because of the subscription numbers that we've seen.
Yeah, I think there are a couple of listings today, and Gala Precision is, of course, one of them. But yeah, all the action is in the primary markets. And maybe you'll see the Bajaj Finance stock also in focus once again because of the big one today. Samina, Bajaj Housing Finance IPO opens.
Yeah, and it's an exciting one. In fact, you caught up with the management last week, so you know the euphoria around this one is rather significant. It's huge. It's one of the biggest IPOs that's going to list or rather open for subscription this morning. Let's take you through what the details are. It's a huge one. So it's 6,560 crores of the IPO opens on the 9th of September, which is today, and closes on the 11th of September. The price band for this issue is fixed in the range of 66 rupees to 70 rupees a piece. I know the grey market premium is not what much we go by, but that currently trades at an 80% premium. The offer consists of an OFS, which is offer for sale from the promoter group, of about 3,000 crores, and a fresh issue of 3,560 crores. The fresh issue, of course, is what you want to watch out for. They've already raised a rather significant amount of 1,758 crores through an anchor investors. There were about 100 anchor investors who've subscribed to this issue. And what's important to note is that they're very, very solid marquee names that have come in. Couple of them highlighted here: Government of Singapore, Abu Dhabi Investment Authority, Fidelity, Goldman Sachs, Morgan Stanley, ICICI Prudential Life, HDFC Mutual Fund, Kotak, to name a few, the big names that have come in to subscribe this issue and helped Bajaj Housing Finance raise 1,750 odd crores in the anchor book offering. Well, let's take you through what they will use the money for. The money will be used to shore up their capital base. They don't have any capital requirements immediately, but this is, of course, money that's kept ready, and this will come from the fresh issue of the fundraising plan, which is to the tune of 3,560 crores. Now, let's talk about Bajaj Housing Finance in a nutshell. What is this company about? What do they do? Bajaj Housing Finance is the second largest housing finance company in India. They have the lowest gross non-performing assets and net non-performing assets ratios compared to other large housing finance companies. Well, they've reported significant, very solid growth of 31% in assets to come in at 97,000 crores in the period from FY22 to FY24. Their net interest income, which really shows you how operationally well run and profitable this firm is, have surged 38% annually, and their net interest margins also sank very healthy at 4.2%. That has significantly grown over the last 3 years. Well, their business is interesting, and why do we like this as compared, or why do brokerages rather like this one as compared to some of its other peers? One, it's a large one, and it's the second largest housing finance company in India, but their customer base is rather diversified. When I say this, what I mean is they've got salaried employees on one hand, and they've also got property developers on the other. The ticket size is not too large, not too small, rather it's on the higher side, and of course that brings a little bit of comfort. At about 46 lakh rupees is the highest in the industry. Well, the outlook on the industry is that the industry is growing at a very significant pace, right? So they're growing at 15% over the next 3 odd years. Housing demand in India is expected to only grow as, of course, families turn nuclear. You have demand that's backed by an increase in disposable income and government aid as well. In the case of Bajaj Housing Finance, they are expected to grow at a much faster pace as compared to the industry at 25 to 30%. And their return on equity is also quite healthy at about 15% growth that we are working with. They have a very diversified customer base. So if their book is diversified, it gives them some sort of leeway to manage their yields, right? And I think that is what's important as well, because if times do get tough, they seem to be in a sweet spot to manage their yields. Well, what works for them, their strength is that because they have this high salary share of salaried customers at 87%, it just goes to show you that they are rather conservative and cautious. And that, of course, is a very strong sign for anybody looking to invest in Bajaj Housing Finance. They've not been frivolous in that sense with their lending. Most diversified player in terms of their product offering and customer base. So that's the other strong positive for them. They do have the ability to leverage their parent company. So remember that Bajaj Finance has a massive presence in the consumer durable space. So the whole idea is that if there is a need and an opportunity to cross-sell, Bajaj Housing Finance will win because of its two promoter group entities. So that's really what we have. They're also very strong on tech. So they provide tech sort of, wealth products for their customers. The only weakness that really stood out for this one is that they're slightly expensive as compared to their industry average. But this could be because, remember, they are also good, strong, diversified book. They've got reasons to be expensive. How expensive is something that you need to check with your advisor. The other one that stood out is they've got a high loan-to-value ratio at 70%. What this means is that if you have a high loan-to-value ratio, it means that the borrower is putting down a very small amount of capital upfront. So the risk really remains on the books of the company that's lending to you. A high LTV, it could make it slightly more risky in that sense if things were to go against the specific borrower or the industry as a whole. But the fact remains, this is a big one, guys. It's an important one, and I think they've got everything working for them. The anchor investors have loved them, and the street is abuzz with hoping for subscription on this one.
So when I spoke to Sanjeev Bajaj on Friday, and he said, I'm overwhelmed by the response. I mean, it's clear from what the anchor investors are saying. And very, very focused on what the trajectory is going to look like. But that's just part of the buzz of the IPO market. So cross-IPO subscription starts today. It's in the auto anch space, 500 crore size. For the issue, and the price span of 228 to 240, lot size is 62. Tollins Tires also starts from today, 9 to 11 September, 230 crore rupees is the IPO size, price span 215 to 226 rupees, and a lot size of 66. And PN Gadgil Jewellers is the other one. Later this week, September 10th is when the issue opens. It's a 1100 crore IPO. Price span of 456 to 480 and lot size of 31. Listing today, the big one is Gala Precision. It has been subscribed 201 times. So it will be the second biggest this year just in terms of subscription. Just by that, we're expecting it to be perhaps a good listing. But that's the IPO story. We're also focusing on the F&O side of things, on what could be a pretty tough day to figure out, at least initially, Samina.
Yeah, Taman, I think I should get a chair and sit right here and have a long distance relationship with both of you in the studio. But yeah, it's going to be a tough morning. We've talked about what the global cues are, and like we've highlighted for you, those aren't looking good. Of course, the bull in Neeraj believes that there could be some recovery coming in, but we'll take you through what that data is. Nifty futures are trading at a premium, but there's a decline in open interest, which largely means that traders are not sure or a little apprehensive to take long positions. This also indicates that they're cutting the long positions on anticipation of consolidation or weakness going ahead. Now, this really is the data that is pointing towards that. Bank Nifty is no different. Bank Nifty trades, in fact, Bank Nifty futures are trading at a premium. The open interest, on the other hand, is also showing an increase. This surprisingly is indicating to an opposite trend to the index. So it seems like there could be a little bit of a bottom made on Bank Nifty, and the indication is that we could see some more long trades or fresh longs coming into play on the Bank Nifty. If I had to break this up, it's the bears that are currently in control of Nifty. On the Bank Nifty, it seems like the bulls could potentially be making a comeback, hoping that the Bank Nifty sees some recovery. Well, that's the spread, and that shows you all the action. In terms of what we have, maximum call writing has been seen at 25,000, which really means that this is the higher end of the spectrum that bulls are expecting. So trade is expected to remain in the range of 24,900 and 25,000. Call writing at 25,000, put writing very aggressively seen at 24,500. Maximum call OI is very obvious and can be seen at the levels in front of you. So if it's a trading range, the range is that on the upside, 26,000 still remains a very critical level of resistance for the index, followed by 25,500. And on the downside, 24,000 is an important sacrosanct support level for the Nifty. This is more medium term. In terms of call and put writing, what we've seen is that 24,900 has seen maximum put writing and 25,000 has seen maximum call writing. So traders not expecting the index to go out of that 25,000 band anytime soon. Well, in terms of stocks, it's been an action-packed day, as you can see. Birla Soft saw an increase in OI, but there was a short build-up. SPI saw a similar trend. BHEL saw an increase or a short build-up to the tune of 7%, rather indicating that what you're seeing, the trend to be rather negative on these stocks. Indus Tower was also seeing a similar trend. LTI Mindtree, on the other hand, saw some long build-up, indicating that the bulls may be trying to get some control of that trade. So that's largely what we have. It's going to be a tough morning. Technical levels will become very important this morning, only because there's a lack of fundamental triggers for the markets. And the Nifty, remember, has been facing resistance, and we saw this last week at 25,300. But for now, very close watch on the support level, because that's largely where the markets hopefully should bounce back from, given that implied Nifty is indicating to a negative start as we see it. Well, we have with us Milan Vaishnav of Gemstone Equity Research now joining in. Milan, it's a tough market, lack of fundamental triggers. Technically, I think levels become very important. Going ahead, what I first want to ask you is if you had traders in the early part of last week who were long on the Nifty, by Friday would have made a loss. Is there any hedging strategy that one could, introduce on their portfolio today to reduce those losses from last week? Or would you just recommend them that if there is a small pullback over the next day or two, they should cut their losses?
I think they can do both, because when it comes to individual investment portfolios, the best thing that one can do is to find out potential resistances on each of the scripts that they are holding. If they are FNO scripts, liquid FNO scripts, then they can start writing the calls at higher levels, the place where they might feel that the stock might resist. So far as the index positions are concerned, I believe that I see two things happening. Yes, one, the kind of decline that we saw on Friday and the kind of soft opening that we might see today, it can lead to some very mild and feeble technical pullback. So they should wait for some technical pullback, and then they can consider writing calls at higher levels, especially the levels which are close to the lifetime highs, that is 25,200 and higher. That's where the real hedge will come in. So I believe they should introduce some hedge on both their investment portfolios as well as the index exposures.
Milan, you expect the Nifty to trade in a tight range over the next couple of days. You want to tell our viewers what the strategy is then in that case on the Nifty?
Right. See, I see both of the things happening. As I just mentioned, that the kind of decline that we saw and the kind of soft start that we might see, there is a possibility of a technical pullback. Now, that technical pullback I expect is going to be I will call it a feeble in nature. That is one thing. Another thing that I am seeing is that we are seeing a formation of a lower high on Nifty, and I'm from the derivative and the options perspective specifically, I'm seeing that 25,000 and 25,200 levels, they are not only seeing incremental addition of the call high, but they are also seeing some unwinding of the put. So I believe that markets are not going anywhere above 25,000, 25,200 range. So in this case, I would again suggest a short strangle where we would sell 25,200 call and sell 24,500 put, both for this September 12th expiry. We can expect a total premium of around 85 rupees that could result in a potential yield of around 3%. And as a part of risk management, we will exit this position if Nifty ends up violating 24,500 or moves above 25,200.
Just for the sake of our viewers, to just simplify this, what Milan believes is that the Nifty will trade in that range that that we've talked about, which is 24,500 on the downside and 25,200 on the upside. Milan doesn't expect little or no movement in the Nifty's trading range. The strategy for an trader will be profitable as long as the range is respected. But what you want to be careful about is that if you see a move on in either directions breaking that range, the losses could be, of course, unlimited in that sense. So as long as the Nifty stays in the range, you're in the money. If the Nifty breaks the range, exit your positions. That's Milan's advice on the Nifty strategy. Milan, you also have a trading strategy called spread on PI Industries. You want to walk our viewers through that too?
Yes, right. I'm adopting a rather very selective and stock-specific view here. I believe that PI industry has been under a short consolidation after the breakout that it saw above 4,000 levels, and after it marked a high of 4,600. So now I see that after a formation of a very small ascending triangle, I see the stock attempting to move higher. So in this case, I would recommend a bull call spread where we would buy 4,600 call and sell 4,800 call. We would be paying a net premium of around 72 rupees. Maximum profit that one can expect would be around 31,800 odd rupees, and maximum loss would be to the extent of the net premium paid. That would be around 18,163. However, we can keep this losses even lower if we maintain a very strict protective loss stop loss of around 4480.
Just very quickly, so this of course is a bull call spread where what Milan is saying on PI industry, the trend looks positive and the gains are expected, but of course the stock may not rise too significantly, and hence he's recommending a bull call spread on this. So your profit may be capped because even the price rises above the highest strike price, you gain on the call only up to the level that you've initiated the strategy at. Milan, just very quickly on PI Industries, if you're constructive on this one, and if there are traders who don't understand the options side, a naked long PI Industries trade could be done?
Yes, you can see. See what happens here is that if you are buying a naked call, obviously your losses are limited to the extent of the premium paid. However, I generally recommend to add some sort of hedge, because when you are buying a 4,600 call and when you are selling 4,800 call, you are also receiving some premium while selling 4,800 call. So that small amount adds to the hedge. Otherwise, this becomes an unhedged naked open position. So generally, I generally recommend going in with a hedge. Now, the only minus point, as you just mentioned, is that because of this hedge, the total gains are limited to the levels mentioned, because above 4,800, this call spread will not make money. The maximum profit will stay kept at 31,800 rupees. But in case of naked call, obviously the risk is higher and therefore the rewards will also be higher. You will keep making money if the stock goes above 4,800, but not in the case of bull call spread.
You're right. Thank you, Milan. At these market conditions, it's probably best if traders go ahead with hedged positions on the Nifty, on the Bank Nifty, and on specific counters as well, because the macros or the global cues right now aren't too supportive. Tamanna, Neeraj, it's back to both of you. It's hedge strategies only today from the sound of it.
Yeah, it's a day which is tough to call. In that sense.
I think that's the name of the game.
Yeah. Limit your losses is the name of the game. You know, the other sort of unknown adding to the situation today is the GST Council meet. So it's the big story as well. The meet will take place today starting 11 a.m. A host of issues expected to be on the agenda, including the taxation that we pay on insurance premium, online gaming, and more. I'm joined now by Rishabh, who is going to be on top of that story and is tracking it very, very closely. Rishabh, you're already at the venue, well in time before the meeting as well. Now, typically, before any GST Council meeting, there's a lot of kite flying about what can happen. But what is officially on the agenda, and what are you learning?
Right, we're at the Sushma Swaraj Bhavan, where later today we'll have the 54th GST Council meeting here. A bunch of state FMs already being sort of rolling in, their representatives also rolling in already early this morning. What we know so far is that there are at least two things on the agenda. One will be the removal of tax on research grants, that is one thing. And the other one is the GST on payment gateway transactions less than 2,000 rupees. These two things are definitely on the agenda, but what's top of the mind is, of course, the health and life insurance premiums that is currently being talked about. Those are taxed at about 18% right now. Remember, Union Minister Nitin Gadkari also wrote to Finance Minister Nirmala Sitharaman on this and requested for the urgent withdrawal of this sort of tax, because life and health insurance is somewhat of a luxury for a majority of Indians currently. So that will be on top of mind. There will also be a status report on online gaming that is expected to come across. That will include all the sorts of revenue implications that the government will have if they decide to reduce the tax burden on these gaming companies, which currently stands at about 28%, which is the highest tax slab there is. There's also obviously the ongoing debate about game of skill versus game of chance that also finds its mention at every GST Council meet. Apart from that, some more possible things that could find their way onto the GST agenda are GST for cancer drugs that could see some sort of a reduction. We're also hearing something on exemptions for electricity meter services. So these are some of the top things on the agenda today, and we'll be tracking them closely.
Stay tuned to NDTV Profit all day. The press conference is expected between 3 and 5 p.m. this evening. And of course, you will get details of what exactly is happening in that GST Council meet a little earlier. So we're the destination for that. Abhishek Rastogi is also joining us. He is founder at Rastogi Chambers, tracks the law on GST very, very closely. Abhishek, great to speak with you this morning. I mean, every time there's a GST Council meeting, sometimes there's over-promise and then under-delivering, because at the end of the day, for all states to decide on giving up 18% tax on insurance, for example, it means a loss of revenue. Do you think we're close to consensus this time round?
I think it will come partially, if you ask me, because the state's recommendation will be very critical here, because state is a predominant stakeholder as well as far as the revenue is concerned. So I think the benefit will come, but it may come with some caveats. For instance, it may come for only certain categories of insurance policies. It could come based on age criteria. And I think it will be a good to start with, because if some sort of benefit comes based on some criteria, then I think at least we're moving in the right direction. So I think that is what is expected
Abhishek,
from
what do
this.
you mean age criteria? I mean, you'll pay tax at a certain age and not at a certain age?
No. So for instance, if we talk about the insurance policies, and these are health insurance policies. So if you are over 60 years of age, premium may be exempted. Things like that can come up in the meeting, and those could be implemented immediately. And there could be deliberations on the other aspects as well.
Okay. Apart from the insurance piece, what else do you expect to be on the agenda and actually see some resolution?
So I think airline for sure is on the agenda, and there needs to be some sort of reconciliation between the state and the center, and also the policy framework needs to be seen, because a lot of foreign airlines are getting that brunt, and these taxes are huge. And also keeping in mind the diplomatic relationships which India has with a lot of these countries. Some of these airlines are national carriers. So I think tax certainty will certainly come into play when GST Council today decides with respect to airline sector. Secondly, I think online gaming, the matter is sub judice. The matter is before the Supreme Court. We are getting dates after dates, and it could be heard anytime now. I think what is more important is not just the rate of 18 versus 28%. What is more important and why we are in Supreme Court is with respect to the valuation. If the valuation is on the entire amount of the gaming bet, then it is the problem. If the tax is at 18% or 28%, but only on the revenue of the online gaming company, then I don't see that should be a big problem. So I think more than the tax rate, the valuation will be the key, and whether GST Council will be able to address that based on the number, the revenue, etc. I think that will have to be seen, but I don't think that decision can be announced in this GST Council meeting. It will still take more time.
All right, thank you so much for that, Abhishek Rastogi there. And yeah, I think from a markets perspective, the big one is going to be the insurance pack, which has run up so many times on the hope that GST relief will come in, that I don't know how much steam there is left in it, but yeah, you might continue to see some of this today as well playing out in trade. The other big question, of course, continues to be about whether these companies will actually pass it on. And while that may be a positive for customers, it'll be a negative for them if they have to pass all of it on, because then where's the relief?
Yeah, no positives for sure, if not a further negative. But it may just make some of the insurance stocks very active in trade today, and maybe sell on news tomorrow. Who knows? I mean, or sell on no news tomorrow. Who knows? So I think keep this sector on your watch list in addition to oil marketing companies, because oil prices have come off. But if you had to really look at the watch list from a stock specific perspective, here are the top things on our mind in the session today. So HUL. Board is mulling ice cream plans and stoppage thereof, so watch out for that one. Deep Industries, an LOA is signed for a 1400 crore order from ONGC. Mazagon Dock has bagged a 1486 crore from ONGC. SpiceJet, Carlyle debt restructuring, but more importantly, issuance of shares to Carlyle Aviation at a price of 100 rupees per share, which should be the big driver for SpiceJet today. And Britannia, the nod for capacity addition being given.
Okay, Zaggle Prepaid is the other one that's on the watch list. They have a new pact with FCM Travel Solution. Reliance Infra is now mulling making electric cars. I don't know how the street is going to react to it, but we saw that with Easy Trip. One day there was excitement, and then the next day there was a little bit of, is this a great idea? Nazara Tech is acquiring 48.42% in Paperboat, which is a gaming app, and Nibe Defense its unit has signed an MOU.
Well, a whole bunch of other stocks to track. Small company, but big order. RBM Infracorn has bagged a significant order to the tune of 3,498 crores from ONGC. This order is over the next 15 years. The company's market cap is sub 1,000 crores, and hence this order is important. RIR Power, they look setting up a 670 crore semicon plant, and Gensol Engineering has amended its QIP issue size from 500 to 750 crores.
Okay, and RBM Infracom, of course, an SME stock, so bear that in mind. Two names, Granules India on the negative side, 6 observations at Hyderabad facility, and Lupin, a negative note from Citi, more importantly, an action from an innovator company against a generic launch for Lupin, which may have an impact on this stock. So watch out for both of these in the session today. Let's take it to our experts very quickly. Kush Bora, founder at kushbora.com, Soni Patnaik, AVP at JM Financial Services, and Chakri Lokpriya, managing partner at Red Strawberry on the fundamentals. All of you, thank you so much for taking the time out and being with us. Good morning, thanks for waiting. Bye. Soni, I'll start with you. If we start off lower today, let's assume 50-60 points on the Nifty and come around those levels where the maximum put OI is there. What's the trade that you then take if you had to take one on the indices?
Good morning, everyone. Thank you for having me on the show. I think Nifty has broken 25,000 on a weekly basis. So even if there is a 60 points of a gap down opening today, somewhere around 24,750 to 24,800, there may be a small probability, a small percentage that it can bounce back towards 24,900, 24,950 odd levels. However, the broader picture will continue to remain that since it has broken the level of 25,000, which was a very crucial base, it becomes a sell on rise sort of a market until and unless it's not able to cross 25,200 and close above it. The view does not get negated. It is a good correction that we can see in Nifty. So any opportunity towards 25,000 becomes a sell on rise. Maybe the next support for Nifty actually falls around 24,600. It's not a possibility that today itself it goes to 24,600. It's just that, whenever we see the opportunity towards 25,000 where the maximum call writers are present right now in options chain, it becomes a good sell and rise. On the put side, if we have to observe, you can see that there was a lot of open interest unwinding towards 25,000, and the highest open interest has now shifted to 24,500. So that becomes a next base or the next support for Nifty. I think the opportunity is only to look for a sell on rise as long as it goes above 25,000. Maybe from there one can look forward and keep a stop loss of around 25,200. So one can see it heading towards lower for 24,600. It's a positional play. It's not an intraday play. For intraday, just avoid whatever small gap downs and gap up or recovery we may see. Just avoid those plays for the intraday move and wait for a positional play.
Of course, easier to look ahead, but the fact is we've not seen this sell-off coming a few days ago. And what do traders do in that case? If anybody is sitting on long positions, either on stocks or on the Nifty or even on Bank Nifty, because early week data last week indicated that Bank Nifty would play catch up, what should they be doing? Should they just stay put or cut their losses?
So I think it's wise just to remain hedged at this point because, we've broken very crucial base. Even if we talk about Bank Nifty, Bank Nifty has given a clear breakdown below 51,000. So I think that's the level to watch out for because Bank Nifty can drag you lower towards 50,000 odd support base. So I think from your perspective, you can go for a balanced approach. It's not all these stocks have given that correction. There are few stocks which have also given a good breakout as well, which are holding on to this trends. But as of now, if anyone has to go for a play, it is always wise to remain hedged until and unless these levels are low, because September historically has been known as quite a volatile month. When it comes to both Nifty and Bank Nifty, and you're combining it with a stock play, combine it with your put buying, hedge your positions, or go for deep out of the money call writing options wherever feasible. So I think that's a strategy one can adopt for going forward.
Okay, morning Soni. Let's quickly get your picks for the day.
Definitely. I'll have a balanced approach today. The buy comes in from the pharma space, DV's lab, which I'm preempting is that a good breakout, a range breakout can be seen in DV's lab. From current levels, 51.40 around, you can buy at these levels, keep a small stop loss of 5080 or target of 50 to 50, 5300 can also be seen. I'm preempting that the range breakout for DV's lab would come somewhere around 5160 to 5170. So that's the preemption I've taken with the long built-up positions that we've seen week-on-week basis, and also the charts looking strong for the stock. So 50.80 remains a good support. Keep a stop loss around those levels. Target of 50 to 50 and 5300 can be seen. The second sell idea comes in from the IT space, Wipro, which has seen almost about to break a 20 EMA hurdle. So Wipro, one can sell in futures, keeping a very small stop loss of 530 in futures level. A target of 510, 500 can be seen, which is actually the next good support for Wipro. So I think this short play can come around quite nicely. And from those levels, once it tests 500, maybe from there a reversal can be seen. But as of now, this short play can definitely be capitalized on.
And Kush, good morning. But before we come to your index calls, let's get your picks for this morning.
Sure. Hi, Tamanna. First of all, very good morning to you and all the viewers. Couple of them, like Soni, I also have a hedged position today. Bank of Baroda, has seen a sell. PSU banks were under a lot of pressure. I think this might continue. This stock, independent of what the rest of the pack was doing, has remained under pressure for some time now. It's broken below the key support zone of 240. So I think the near-term downward pressure could continue. 232, 227 are the targets to look at on the downside. 242 is where you place your stop loss. On the long side, I've got Ratnamani Metal and Tubes. This stock has seen a fair bit of consolidation over the last couple of months, but in the last few sessions, it's seen a very decent breakout. On Friday, the stock was up on the back of very good volumes, plus the kind of relative strength that is there is evident with the move that we saw on Friday, vis-a-vis what the rest of the market had done. So this is a positional buy with targets of 39.50 and 4100. The stop loss on this one comes in at 36.50.
Okay, we'll take a very quick break. We're back with Chakri's view and also Kush's call on the index. But before we get into that break, so NSE, the National Stock Exchange, has a new bull. And this is an interesting take, really. And I hope we can actually see pictures of the statue as well, a closer shot. Because this is interesting because you have the bull and you have a whole number of statues around it to depict the Aam Aadmi and Aam Aurat of India and the connection that the stock markets now have with more and more people. So this is something that Ashish Chauhan of NSE said, that now you have traders or people investing in stock markets in all but 30 zip codes across India. And that's what this bull has to depict. We'll try and get you some clearer shots of this, but right now we'll take a very short break. Stay tuned for more on the other side.
फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का
Welcome back. You're watching India Market Open. It's expected to be a rough start. The pre-open indicating to not such a good morning in early minutes of trade. We'll give it some time, let things settle. A 130-point cut is what it seems like in the early ticks this morning. Chakri, how are you feeling? The lack of any sort of triggers for the market. The only big cue is globally the Fed rate cut. The sentiment for some reason has turned a little sour over the last 2 to 3 days of trade. If you are a fundamental investor, what is your strategy? Are you going to use the current weakness to go out and buy stocks? Because like we discussed this morning, the recent corrections in the market have been rather shallow. So every opportunity has got bought into and will get bought into.
Good morning. I think in the last few days, you've had a series of both missteps in Indian politics, Indian markets, Indian various factors, and as well as internationally. Now, internationally, it's fairly more clearer, simpler, because, now the question is whether the US will cut its rate by 50 or 25. There's a 70% probability that they'll cut it only by 25. ECB, EU starts cutting rates again this week. So which means this week, next week will shape how Indian IT and all the export-related sectors in India do, which I think are fairly well placed, whether it's information technology or textiles, chemicals, of course, still early cycles. On the other hand, in the case of the Indian markets, still it's only the government and public sector which is spending. Private capex is unlikely to show, has not shown any signs. Therefore, all the and infra out of that, it still remains to be the main thing which is spending. So we would still buy into some of the infra names, power financiers, which have corrected.
Okay, let's shift our focus to pharma. It's going to be a sector in focus because of the number of updates coming in on several companies in this space. And Varsha's collated all of that for us. Yes, Varsha, what can we expect?
Thanks, Samana, for that. So let's start with Lupin, wherein Lupin is actually facing a legal challenge related to its generic launch of a product which is used to treat kidney problems. Now, this product, the original maker of this product is Otsuka, which is actually challenging a recent court verdict that favored Lupin to launch this generic version. Now, the court had previously allowed Lupin to launch this version in April 23rd April 2025. However, this new appeal introduced uncertainty whether Lupin will be able to proceed with this plan or not. Now, this product is actually primary product for the innovator, that is Otsuka, and this contributes almost 1.5 billion US dollar in revenues for the innovator. Now that's what the market that Lupin was actually targeting. Now let's see what Citi has to say. Citi has a sell rating with a target price of 1700, which implies downside potential of 24%. Now according to Citi, Lupin's planned launch of the generic of this product in April 25 might be risky due to the legal issues, and Lupin may choose to delay the launch of this drug. According to Citi, this will actually impact the Lupin's earning, because Citi was expecting that it will contribute almost 30% to Lupin's revenue in 2026. The company also, the other is the company had already lost the litigation to the nearest possible product, Silent, which is used as an oral contraceptive as well. Then we have Granules India, wherein they've got 6 observations from US FDA at its Hyderabad plant. Inspection was from 26 August to September 6. And this facility is actually crucial for manufacturing finished doses and pharmaceutical intermediates, which supports global operations. Although we don't have the revenue contribution, but we do have the capacity. So they have 23,200 tons per annum capacity for their intermediates and 26.8 billion units for their finished doses. Then we have Suzlon Pharmaceuticals, wherein US FDA conducted inspection at one of their subsidiaries called Casper Pharma, which is in Hyderabad, and the inspection was categorized as voluntary action indicated. Now, what does this simply means is that the US FDA had found some lapses during the inspection, but these issues are not severe enough to require immediate enforcement action. So the company is therefore expected to voluntarily correct this issue to comply with the regulatory standard. Then lastly, we have Ami Organics, wherein the Japan's regulatory had declared their Sachin Surat facility as GMP compliant, and company Surat manufacturing will be a good manufacturing practices compliant. Now, inspection was already conducted in June 7 without any major observation, which was actually highlighted in their Q1 FY25 con call.
Got it. Varsha, thanks. So much of news flow packed out there in pharma. And Chakri, I mean, it's difficult to decipher what one will be the topmost, but I thought that the innovators' notice to Lupin or Granules now having a US FDA issue in one of its largest plant seem a bit negative for both. What did you make of it, and what would you do if you were a shareholder here in these stocks?
I think, these companies will do launch at risk, as they usually do. And, they have an excellent, legal teams in place. And so, I wouldn't really panic if I am an existing shareholder, simply because, there will be price erosion at launch, but that kind of numbers are already in place. So I wouldn't think that this new shareholder, these actions, a lot of actions are anything significant.
But look at that, the two stocks are starting off lower. Very quickly, Kush, before we get the brokerage call of the day, Kush Bora, if you had to trade a Lupin, a Granules, or some of the other pharma stocks which are active, what would stand out for you, particularly these two, specifically Granules and Lupin?
So Lupin does stand out. The reason being that the stock is still seeing some momentum. It might open lower, but there is a strong support zone at 22,200. So if that is maintained, I think this dip might turn out to be a buying opportunity. Granules too, stellar run, but negative divergence is seen on the cards, and support zone of 685 units, testing that perhaps the opening will be lower than that, so might turn a little negative for the day or for some time. So between the two, Lupin looks good. But otherwise, we've discussed a couple of stocks like Concord Biotech and Mankind Pharma in the last, week or so, and they continue to remain strong. So any kind of opportunity, of a dip should be taken as, an entry point. So Concord Biotech remains, my favorite in the pack.
So only a couple of stocks that, we were discussing that would be in focus is going to be crude ancillary plays. So with crude trading at recent lows, any opportunity to go long in OMCs, paint companies, or lubricants, because some of these counters have been quite active all through last week on the long side?
I think OMCs are decent. However, if you just analyze the paint companies, Asian Paints and Berger Paints individually, they have a stronger structure on charts and derivatives data, especially a stock like Berger Paint, which is quoting just around its resistance of 600. So any move, if it's able to cross 605 in intraday today, that will give you a good option chain breakout, and the stock can head towards 625, 630 levels. There's a very strong support of 590, 585. So I think the risk reward ratio also stands to be favorable at that point of time. So definitely a stock that can be, just considered into would be Berger Paints. Asian Paints has also given a good breakout. It's run up well. However, at the levels of 30 to 70, 30 to 80, there's a possibility of Asian Paints running another 1% at max and then facing a hurdle. So I think out of all these stocks and all these sectors put together, Berger Paint is something that is still continuing to give you that strong side up. So I think it's the stock to look out for.
Okay, let's get the top brokerage call this morning. Harsh is joining in. Harsh, what's on your radar?
Good morning, Tamanna. You're seeing Medanta rather meeting up with Motilal Oswal, and some very crucial takeaways just in terms of turnaround of the developing hospitals business. Now these are generally hospitals in tier 3 beyond, and they have certain characteristics, including they're open for 24 hours of the day. These are called developing hospitals, and this has seen a softish growth. But what Medanta seems to be suggesting now as part of this conversation is that there's been a bit of a turnaround here over the last couple of months. So growth seems to be inching back. Of course, outside of that as well, very strong growth plans that Medanta has. Also on the matured hospitals front, they're seeing good traction, good growth, and that growth momentum is sustaining where matured hospitals is concerned. But with regard to the growth itself, you're expected to see very strong growth in beds, 3,373 beds by FY25 end, and longer term guidance of 5,000 plus beds that Medanta has. Matured market hospitals in any case have done very well for them, 15% growth on top line, EBITDA also going up by around 300 basis points odd, 3% odd in absolute terms, and therefore you're seeing a bit of a turnaround or good traction on that count as well. But with turnaround in developing hospitals, I believe that, or rather Motilal believes that it's a key positive for Medanta. Overall, they're looking at a valuation of 1,380 rupees per share, which is a 24% upside from here. They're valuing this at roughly 33 times 12-month EV to EBITDA forward. So watch out for this one. Looks very interesting in terms of commentary.
Well, this is one stock you want to track for this morning. The reaction, though, is very muted. A quick check on how stocks like Mazagon Docs are doing in early trade. There's been order wins for the counter, even though the broader sentiment might have been lower. But Mazagon Docs is indicating to a gap up in trade. Let's take a look at the other shipbuilders. Like I said, these stocks usually move in groups, but Cochin is trading flat. Garden Reach also may not be seeing a positive bias, but Mazagon Docs up 2% in trade. Kush, I know Mazagon is not in the futures and options space, but would you consider initiating a long trade on Cochin Shipyard or Garden Reach only because Mazagon Docs is up 2% this morning?
I mean, I wouldn't even consider going long on Mazagon Docs, despite the kind of news and the moves that it's seeing. This is, I think, if at all this sustains, then this will perhaps be the first kind of a up move or a bump up that, we are seeing in some of these names. Too early to jump in, and, too early for my comfort. So I'd wait on, all three names, wait for some more, confirmation, some more price action on the upside before I, before I sort of have a buy signal on some of these. So I'll wait it out. This is the first move that, we are seeing. And as I said, remains to be seen if it sustains.
Chakri, if we see a 25 basis points rate cut, which is anticipated, what's the impact on financials? Would you go out and buy or sell any of the large cap, mid cap financials as a result of that action?
Yes, you're right. We will buy financials. We will buy housing companies to begin with, because they'll see the fastest cut, reflecting, and that will also perk up the demand for housing companies. So PNB Housing, LIC Housing, these companies to begin with are inexpensive. Second, the infrastructure finances, REC Power Finance, their loan book growth is not going to slow down, as feared by the market and some brokerages, because that's for the banks. Maybe those banks in general might slow down a bit, but not infra finances. And third is, of course, PSU banks are also much better placed than the private banks. So that would be the pecking order: housing companies, infra financiers, and then PSU banks.
Chakri, are you excited at all about the insurance play ahead of the GST meet? Do you think that there is, any real differentiator for these companies if there is a relief on the GST?
No, it's very unlikely unless, insurance companies also start manufacturing EV cars or something like that. They will largely probably, cut some kind of relief to the mid-income taxpayers. They'll have a cutoff, some 5 lakhs or something annual income if they do. But outside of that, I don't think life insurance are worth a significant investment.
What about the health pack, and why do you want everyone to make EVs? Is it because that's in vogue now?
Indeed, I'm also thinking of manufacturing EVs, and Yeah, it seems to be the flavor of the season. And but that aside, I think the life insurance companies, basically, the GST cuts, meaningful cuts, is very unlikely to happen across the board. It's probably a mid-income housing, the taxpayer, they might see some relief.
Got it. Okay, 50 seconds left. Pre-open rates have settled. So I have 20 seconds each for both. Sonia, I'll come to you. 20 seconds. Your top call for the day today.
I think here we'll just look at Pidilite, which is giving a good range breakouts. I think one can just look forward. If it crosses 30 for 260 for the day, one can continue to buy in that stock for a higher targets of 3,300, keeping a stop loss of 3,220 for the day.
Short target, short stop losses. Kush Bora, your top call for the day today. 15 seconds.
Looking at the POCL, Pondy Oxides, the target on this one could be 24, 25 and 2500. And on the downside, you have stop losses at 20 to 75.
Okay. Again, as you see, viewers, on that base, very short stop losses in target. Probably the nature of the game as well currently, because the markets are looking choppy. We're likely to start off lower, of course. The question is only, do we succumb to further selling or do we stabilize? Let's pull up the first trades. Flat actually, not as bad to be honest, but it was expected to be maybe a third of a percent. It's about 1/4% on the Sensex currently. Bring up the mid caps and the small caps very quickly before we get the heat map up on the screen, because I don't think the broader market's moving too much. Just about 1/4% on the mid cap space as well. Small caps, well, about 1/3%. The Nifty hovering around that 24,800 on the futures, which is where the highest put OI is. Get the heat map up on the screen and show you what's moving and what's not. Fair degree of red, but a little bit of green as well. Let me start with the red first. NTPC, ONGC. Remember, PSUs are being taken to the cleaners all of last week. PSU banks predominantly, but some other PSUs too, and we're seeing that pressure today as well. Weakness in Hindalco, weakness in Power Grid, Tata Steel. So metals coming off, and there's some talks about SAIL having cut target prices or prices for metals or steel rather. I don't know if that's also brewing this weakness here. What's doing well? Shriram Finance on the brokerage note from UBS up about 1%. HUL up about 1%. HDFC Life, SBI Life. So life insurers ahead of the GST meet in focus as well. Don't quite see a BPCL though. So while we see ONGC sulking because of the crude price fall, Tamanna, we don't quite see BPCL in the list of the top 20. So OMC is playing it quiet right now.
Yeah, because there is no guarantee that BPCL will be allowed to pass on rates one way or the other. So perhaps that's why that kind of a move. But let's pull up what's happening in the broader markets this morning as well. Quite range bound there on the top line and nothing massively negative on the broader markets. This is actually a relief. This is actually good news, because considering what the global handover and the setup look like, this actually is not half bad. About 0.5% down, both on the small cap and the mid cap indices. Let's look at specific stocks. Insurance is in focus, and you saw that on the Nifty as well. But let's see what's happening with LIC, a Star Health, and HDFC Life, for example. Nothing much there. I'm not sure what 20 microns is there, but nothing massively moving on insurance right now. Mascot Docs was in focus. Remember, 3 major orders from ONGC. Mascot Docs is the recipient of one of them, about 1% up. 1,400 crores owed is the size of the order. On the negative side, Lupin, Granules, both of them with bad news. Lupin because Citi has lowered its target. This is because an innovator has challenged the release of a generic drug that they want to put out by April 2025. About 1.5% down on the stock. Granules has received 6 observations from the US FDA after a site visit. That is not being seen very well for the stock. 3.5% down this morning. Suzlon has completed an acquisition of Renom Energy Services. It was on the cards, and you're seeing some profit booking coming in there. And Godfrey Phillips, meanwhile, was the big buzzer. Most of last week, it is seeing massive profit booking now. Now that the news has come, Beena Modi has been appointed MD. Samir Modi is out of the board, so that family feud has sort of ended for now. Stock is about 4% down. I would say largely negative. Difficult to spot big winners this morning, Samina.
This morning, so it's not looking great as we see it. In terms of gainers, I think the stock of the morning would be SpiceJet. They've managed to have some sort of a restructuring deal, and the street is enthused about that. So the stock is looking good in early minutes of trade, up nearly 5%. If I can quickly get SpiceJet on the screen, 4% higher on SpiceJet is what we have on a morning that's rather muted. And also GM Financial, I don't know what's happening here, but the stock is up 3.5%. Metro Brands, there was a little bit of a block deal that happened. The stock responding to that quite well with the 3% uptick. Pharma is the theme this morning as well. So while you've got some pharma stocks that are losing out on back of specific company action, the general broader sentiment seems to be pro-pharma. GM Fadla has been a counter that we tracked all of last week. This morning too, the stock sees a 2% gain. Hotels aren't doing too badly. Chalet Hotels is up about 1.5%. You've got Macrotech Developers that's up 2%. Dixon Technology that's trading with marginal gains. Persistent is marginally higher as well. Deep Industries won a big order, but there's been no major reaction to that. Mazgaon Dock started the day off quite well, but it's at the day's low. 13% on Deep Industries is what we have. We'll be talking to the management very shortly, but that's a significant order and the stock's reacting to that. On Mazgaon Docks, there was an order win. The stock opened up, gapped up, but the gap up has gotten sold into, with some traders probably taking some positions off the table given the broader market sentiment. Ola Electric's 1-month lock-in period has come to an end. 4% of stocks can now be traded freely. Like we've said, this doesn't mean that it's going to be sold, but the stock is lower. 3% lower is what we have. Raymond Lifestyle as well, after its fantastic listing last week, the stock was down 5% on Friday, and it continues to see a 5% cut this morning as well. SJVN is also down 4%. Granules, Tamanna highlighted, is trading lower. KSB, Aptus Value, Raymond Limited are some of the other counters. A check on Bajaj Finance and Bajaj Finserv, only because you've got Bajaj Housing Finance that opens its IPO today for subscription. Bajaj Finance trades 0.25% higher, no major up move there, and Bajaj Finserv also trades flat. VST Industries is down 6.5%, Wipro is down 3.5-4%. So there is pain. Some of the cuts on the street have come rather without warning. The sentiment is very cautious, and it seems like at best we could consolidate, at worst we could potentially go home negative. Sony, a quick word on Bank Nifty. I don't know whether we talked to you about it, but August was a tough month for Bank Nifty. PSU banks on Friday sold off quite sharply. So the trend almost reversed after Monday to Thursday being strong for banks, and then Friday saw weakness, and today is no different. Would you be brave enough to initiate a short trade on Bank Nifty or on the PSU banking index?
I think Bank Nifty, definitely a good breakdown has been witnessed on Bank Nifty on weekly day closing basis. We can see a very aggressive call writers around 51,000. So any position in Bank Nifty for a short side should only be looked at a small rise, maybe towards 50,600, 50,700 in spot level. If you see, one can initiate a short from those levels, keep a stop loss of 51,000, and then again from those levels, you can see it sliding towards 5,200, 50,000, because the next support for Bank Nifty stays at 50,000. Instead of going for a short at current levels, just wait for 100, 150 points of an upside in Bank Nifty, a small rise, and then go for a short from those levels, because 51,000 a very clear resistance in Bank Nifty.
It's a very defensive play today in the markets, because if you look at sectoral indices as well, you have the FMCG companies that are the only ones really showing some signs of life, like Balrampur Chini, up about 1.5%, HUL 1%. Now, these are not companies that move massively. Coach, just coming to you on what you've spotted this morning, and a take on any of the players like an HUL, a Dabur, or Colgate right now for a short-term play?
As you rightly mentioned, some of these names aren't really, the trader favorite kind of a counter. HUL we know is up on a back of good news. So if you want to trade in a defensive play, then perhaps at the moment HUL does sort of look like, the only place to hide. But here too, you might find resistance around the 2,900 mark. So I would say don't trade in some of these names. If you want to, run for safety, then perhaps, some of these names might make a cut. Just a quick word or a quick update on one stock that we discussed last Monday, and that is Mangalam Organics. Now, we had discussed this stock when the price was around 540. This is not a slip of tongue. The price was actually 540. All targets surpassed. The stock is close to 700 now. My suggestion, book partially at least. There's still upward momentum. The stock is in an overheating territory. But since there is momentum, you might want to take some money home, but still hold some of the positions. Your trailing stop loss now comes in at 665, but you'd want to book some profit and enjoy the little pockets of green that we are getting to see, however limited, but that we're getting to see today. So quite a run. Mangalam Organics, book partially, hold the rest with stop loss of 665.
Okay. Chakri, the one thing that seems to be very focused is oil prices, right? And the correction that we're seeing there. Does this make OMCs, even with the risk of prices being cut by the government, a play, or would you not quite want to go along there?
I'd rather focus on Reliance Industries because, you're still pricing in mid-cycle margins, because with an interest rate cuts coming in the US and Europe, demand will perk up globally for oil. And also you have anyway the heating winter demand coming in, etc. So there are various reasons to support a mid-cycle margin, and recent refining margins have come off quite sharply. So given that, I think Reliance Industries is far well positioned, given that it's both O2C business, right from refining to up to the chemical spend.
Okay, just want to mark Adani Green Energy, because what's happened is that they've redeemed $750 million worth of holdco notes. Now, effectively, instead of refinancing, cash flows have enabled them to do this. Standard disclaimer, of course, the Adani Group owns NDTV Profit as well, but this is a large sum which has not gone in for refinancing, but has been redeemed, which effectively speaks about cash flows. And I think, Chakri, the other piece is, for Adani Green or for some of the others, but the fact that power companies are now getting enough cash flows is a big thing, right? Are you constructive power?
Absolutely. Adani Green, and in fact, also we are constructive on. And in power, and the same theme continues to hold, whether it's Suzlon or Sterling Wilson, or even, and that's the reason I mentioned power financiers, because all these companies are financed by the power financiers. Now, given that, there's still weakness in private spending and capital spending, government spending on capital expenditures on power still remains strong, will remain strong.
That's Adani Green. Sony, just very quickly, you've got FMCG and IT that are not doing too badly this morning. We've talked about HUL and some of those other names, but what about ITC? It had a bad fall on Friday, but there's a little bit of recovery this morning. Fresh longs on ITC, and also in the tech pack, anything that's standing out for a short trade?
So I think, Samina, we can see ITC trying to hold on to that 500 support. Now, it's not showing you a very strong recovery either, because there's a resistance around 505, 506. If it's able to cross those levels, there's a possibility that it can show the recovery and head towards 515, 520 odd levels. If you look at a broader structure, it is just consolidating. The broad range for consolidation is from 490 to 500, 510. So that's a level. I think ITC is decently placed. One can continue to accumulate, not for an intraday play, but more like a positional play. And, from the IT space, a short side trade, I think we've shared in the morning a short call on Wipro. I think that's still continuing to hold. 530 was a very small stop loss placed in futures. The stock can head towards 510, 505, because the support for Wipro next stands around 500 levels. So it has to test somewhere around those levels before seeing any sort of a reversal or a sort of a bounce back. So I think it's wise that it's just broken the 20 EMA. One can continue to go for a sell trade in Wipro, keep a small stop loss of 530, 510, 505 can be the targets.
All right. Thank you so much, Sony, Kush, and Chakri. Thank you so much for joining you. Chakri, especially, since our conversation in light of that, today is EV Day. So a great day to start your manufacturing of electric vehicles company, if any.
Thank you. Good to know. Thank you.
Okay. Thank you so much. And the reason I bring that up is because the next piece is our special segment on EV Day. And the fact that so many players are getting into it is not necessarily a bad thing. It's also telling you how robust that entire ecosystem is. We have a special conversation also lined up on this with Tata Tech. But before that, let's get you an in-depth analysis of the sector to give you actionable insights. Puneet joins in with key data. Yes, Puneet?
Well, thanks for that. So, the penetration of electric vehicles has gone up by roughly 3 times in the last 3 years, and that's more so, of course, led by the pandemic as well, which gave rise to personal mobility going forward. So when you look at, it constitutes roughly about 6 to 7% of our current total industry. And when we go forward, this has also been led by the two-wheeler industry specifically, which has led the way because of the number of players that are there. Now, when you look at, the top 5 players in the e-two-wheeler segment currently, we have, of course, Ola Electric, which has grown their sales by roughly over 100% on a very high base of FY23 as well. But do take note of the legacy players of TVS and Bajaj as well, growing upwards of 100 as well as 300% also for someone like a Bajaj Auto. Hero MotoCorp, although on a very small case, has now also made meaningful presence in the segment. But the only disappointing part was Ather Energy, because they were very early entrants in it and haven't been able to capture the market as much. When you look at the market share, Ola Electric, of course, comes to around 35% at the end of FY24, which is month of March, one of the leading guns. And, TVS is another one at the end of FY24, very strong market share it has gained. It was ahead of Bajaj in some ways. And we look at, the market share in FY25 as well going forward, because that also gives a very different picture to what had happened at the end of March. When you look forward and move on to the next graphic and see, what has been one of the key things for all e-two-wheeler companies in the FY25 specifically. Now, Ola, while its growth has been upwards of roughly 60% in this particular time frame, the market share picture has dramatically changed from March to August, and that's been one of the key things to watch out for. So for Ola specifically, the market share has fallen from roughly 46% at the end of June to 31% now at the end of August in just a span of 2 months, while the others, such as Bajaj Auto, have been one of the biggest gainers in market share. And when we move on to the next snap, we'll be able to see the next percentage-wise split also. Now, specifically, you see that 52% is where Ola was at the end of April. This was at the end of the FAME 2 scheme. They were at 46 and now have dramatically fallen to 31% because of entrants such as Bajaj Auto increasing their presence. Look at the market share. It's gone up from 12 to almost 19% now, while TVS has maintained this market share at 20. Do take a note of Ather as well. It's doubled from the low levels of May of about 8%, 50% up by that time. But specifically, it's not been able to capture that market as we spoke about. When we move on and look at, what's happening in the four-wheeler space as well specifically, Tata Motors, of course, the undisputed market leader, 90,000 to 1 lakh cars sold, which were electric last year. They have 70% market share on the back of launches of the Nexon as well as the Punch. Specifically, in this particular, we're going to see a lot of competition. Hyundai has already said that they are launching something in this particular year. Mahindra, as well as the other company that we want to look at, is Maruti, that they'll be also launching by the Q1 of Q1 of calendar year FY25. So somewhere around January is when we should expect 1 or 2 launches from Maruti in this particular segment as well. And finally, to end this particular discussion on commercial vehicles as well, legacy players are specifically in the EV bus segment is something to watch out for. We spoke about this on Friday as well. The current market share is divided between Ashok Leyland at 33% as well as Tata Motors at around the same percentage as well. While there are also new and incumbent players such as JBM Auto as well as Electra Green Tech as well. Finally, what are the factors to watch out for going forward as well? The new FAME 3 scheme is expected to be launched in the next couple of months. This is, of course, the scheme ended in March, on March 31st, 2024 and was replaced by the EMPS scheme. But do note that the EMPS scheme had reduced the benefits by roughly 50% to buy an electric vehicle. So the two things to watch out for will be the outlay of FAME 3 going forward, as well as, within the segments such as EV bus segment, what could be the share, as well as for four-wheeler cars, as well as electric two-wheelers as well. So overall, market has been very strong going forward, multiple factors to look at. Back to you.
And it's going to be an interesting day, World EV Day, and of course there was a deep dive by our analyst on what it means. So Praneeth, of course, highlighting for you where all the action in that space is. A company that's an ancillary in some sense to the EV space is Tata Tech, and we've seen the kind of euphoria and excitement this counter saw during its listing time, but unfortunately in the recent past has sold off quite sharply on back of a big account of it seeing a drawdown. Well, Warren Harris, MD and CEO at Tata Technologies, now joins in to talk to us about what business is and what the key triggers for the company are. Hi Warren, good morning, thanks for joining us. Warren, you're in an industry which has that much needed momentum but still grapples with volatility. How are you coping? Is the outlook looking better today than it did, say, in the early part of this year, or are things tough?
Sure. Yeah. As far as the momentum in the industry is concerned, we're not seeing any any tapering of demand. I think there has been a slowdown in EV sales, but we're in the business of investing with our customers in future products, and certainly demand continues to build. So we're excited about the direction that the industry is taking. We're excited about the contribution that we're making, and the biggest challenge that we've got at the moment is capability and skills, and that's why we're investing all over the world, and specifically in India.
Interesting, Warren. So you have supply side concerns. While demand is looking very robust at the current times, is that what you mean?
No, the demand, I think, is very robust. Despite the fact that that growth in EV sales has started to plateau, the growth is still very much there. There was 14 million units that were sold last year. This year, the industry, despite the headwinds in places like the US and certain parts of Europe, is still expecting to sell some 17 million units of electric vehicles, and so that translates into almost 1 in 5 vehicles that are sold today will have some form of electrification. And if you project to the mid 2030s, we expect that to transition to about 1 in 2 vehicles sold will have some form of electrification. So the industry is very much pivoting, not just to electrification, but also investments in software-defined vehicles and in autonomy, and that continues to provide tailwinds for organizations like ourselves. The big challenge that I think we're all grappling with right now is the availability of relevant skills, and so we are investing ourselves in building the type of capability that the industry is going to be needing.
Interesting. Warren, how are you placed as compared to your global peers? I know you have your strengths, but there are players who've been around maybe longer than a Tata Tech, and then there is, of course, a geographical bias too. How do you deal with increased competition and geographical sort of biases?
Well, if you look at our EV journey, it began in 2010. Mr. Tata challenged us to put together an electric vehicle technology demonstrator that was as frugal from a pricing perspective as the Tata Nano, and we revealed that vehicle at the International Automotive Show in Detroit in 2012, and that was the same show that Elon Musk revealed the Model S. So we've been part of the EV journey almost since the outset, and we partnered not only with group companies like Tata Motors and JLR, but also progressive organizations like NIO in China, Polestar in Scandinavia, and we've recently, as many people will know, have helped VinFast launch the 2 SUVs that we took turnkey responsibility for. So, although we are very proud of our heritage in India and the nexus and capabilities that we have there, we're very much a global company, and we have sites and teams that are very close to our customers in different parts of the world. And I think that footprint, that coverage model, combined with the experience that we built up now over the last 14, 15 years, I think is really informing the type of confidence that our customers are extending in us.
One of the easiest ways to scale up, and since you have supply side concerns, is acquisitions locally or globally. One may argue that the better way to do this is either organic or through partnerships, which you've committed to recently. Anything that you're eyeing to build up your supply side quickly?
I think we're open to both organic growth as well as targeted acquisitions when they make sense. If you look at the history of the company, the history of the company has been informed by 3 relatively large acquisitions. There was the acquisition in 2005 of the company that I was a part of, Incare International, and we followed that up with investments in in a company called Cambric in 2012 and a company called Ascenda in 2017, 2018. So the organization has demonstrated its appetite for acquisitions when it's made sense. But we've typically done that thoughtfully, and we've focused as much on capability and customer acquisition, as well as the cultural alignment between ourselves and the organizations that we've brought in. So we're very much open to complementing the investments that we make organically with acquisitions when they make sense.
Then no better time than now for it to make sense, right? Then I'd imagine that you would be eyeing a company, there is conversations underway. Give us clarity, because the environment, like you've mentioned yourself, is very robust.
And you're absolutely right. I think the fact that we're now a public company, we have a balance sheet that is debt-free. We have a very healthy cash position on that balance sheet. So we are primed to be able to pull the trigger and make acquisitions again when it makes sense. But we're always going to be thoughtful. We have a list of candidate targets that we are evaluating, and we will act with some conviction as and when we believe that the target acquisition will be right for us.
Warren, is the VinFast overhang finally behind you? No more downside expected from them? And also, was this a VinFast specific account problem, or do you feel like this could be seen, or have you seen this across other clients as well? Just want to get a sense whether this is really restricted to one company or a sector as a whole.
I think if you look at our customer base, it's a mix of traditional OEMs and associated supply chains, and it also includes new energy vehicle companies like VinFast. I think with new energy vehicle companies, we have the opportunity to demonstrate the end-to-end capabilities that we represent. And with VinFast, we took the entire responsibility concept through the launch of the two SUVs that we were responsible for end to end. And so, we will continue to expose ourselves to that side of the market, because a lot of thought leadership and a lot of innovation is coming from those types of companies. But those companies follow a very specific kind of life cycle. They invest in new product, they then build product, they generate demand, and based upon their ability to be able to sell product, they then invest in follow-on products that will enhance and build out their portfolio. We expect that to happen with VinFast. They've launched now 4 SUVs in the last 12 months. They are generating demand in different parts of the world, and I think if they're successful with satisfying that demand, there's no question that they will invest in follow-on vehicles and capability. And given the success that we've enjoyed with that organization and through that partnership, we would expect to be part of their future plans. I think one of the things that I'm very proud of is the fact that despite the fact that we've had material runoff at VinFast, we've managed to backfill that. I think I've commented in the past that last year, outside of VinFast, we grew the business by 30%. The runoff is, as you mentioned, largely behind us. We expect to return to sequential growth in Q2 and beyond. And we have not seen any softening of demand outside of VinFast in any of our other customers. And so we're very bullish about the continued momentum that we are building inside of the company.
Well, one of the concerns when you were listing as well was that Tata Tech has a very concentrated portfolio. Have you managed to change that around? Because we've seen the fallout of that through VinFast, right? Does your portfolio look a lot more diversified today in terms of client base?
Yeah, I think if you look at some of the announcements that we've made in the last 6 months, we've announced the partnership with Agratas that partnership advances our capabilities upstream as far as the EV value chain is concerned, to include now pack design. We're also going to get involved in the industrialization of the 2 gigafactories, one in Gujarat and the other in the southwest of the UK. We also announced, I'm sure you'll be aware of the partnership with BMW. BMW came to India, evaluated all of the candidate ER&D organizations, many of which had incumbent relationships with BMW, but they made a decision to partner with Tata Technologies, which we think is a testament to the breadth and depth of our capabilities, particularly in software-defined vehicles. But we also think it's a testament to the attractiveness of the value system that underpins the Tata Group. And so I think those are 2 very high-profile examples of the diversification that we're affecting as far as our customer base is concerned. And we'll continue to be very focused upon a small number of very strategic partnerships that we build with our customers, because the type of proposition that we represent requires a level of customer intimacy that cannot be extended to 100 companies. So we believe that our ambitions in terms of growth are predominantly going to be satisfied by focused relationships with between 20 and 25 customers.
Just a quick word on the Nifty, and there's been a little bit of improvement. The Nifty and the Sensex both have recovered from the day's low point. The Nifty at its day's high and the Sensex now marginally trying to fight its way into positive territory. We'll wait for it, but the Nifty now not looking as bad as it did at 9:15 this morning. Warren, we were talking about these deals and these strategic relationships that you've gotten into with the likes of a BMW. What's the average time horizon and payment cycle or life cycle of these relationships?
There's no kind of there's no life cycle that defines all of our. There's no standard life cycle that defines all of the relationships that we have with our customers. Some relationships take a while to build. Customers will test us in terms of capabilities. We will build relationships with the leadership team. Confidence will grow. And that will inform the scale that we will then drive jointly between ourselves and that customer. Other relationships like BMW will start from a position of no history between the 2 organizations. And given the strategic intent of that customer, they will scale very quickly. And that's what we've seen with the work that we're doing with our colleagues in Munich. So there's no one size fits all. But I think the characteristic that we really look for is customer intimacy and strategic commitment between the leadership team. When we are entrusted with next generation product, we're being entrusted with the family jewels of that organization. And so it's imperative that we build relationships that represent a commitment from us to our customer, and just as importantly, a commitment from the leadership of our customer to Tata Technologies.
And Warren, very lastly, because we are short of time, but is there a good chance that you will outpace the growth you deliver in FY24?
We don't provide specific guidance, but we continue to be optimistic about our prospects for growth this year and beyond. So, the momentum inside of our organization continues to build.
Warren, thank you very much. You have a good trip to the US, and we'll hopefully see you back in the city at some stage later. In the meantime, the markets are not doing as bad as expected. It's not too painful on Monday morning, at least for now. But the big talking point is the primary markets. So the secondary market action this morning, at least, has moved to the primary markets with 3 big IPOs, or rather 3 IPOs opening today, but one big one. Taman, I think the big one is going to be Bajaj Housing Finance, the second largest housing finance company in the country, backed by the Bajaj Group. 6,500 odd looking to be raised, out of which 1,700 already done.
Yeah, and you're right, Bajaj Housing Finance is the headline IPO this week, but there are so many. In fact, IPOs has become, in a sense, a larger actionable space then even the cash market, especially for FIIs, FII inflows have been at all-time highs in IPOs, which is also why you see so much action on listing day. And a whole set of IPOs will be opening this week. So we've got right now Deven Choksi, Managing Director at DR Choksi Investment, and Avinash Gorakshakar, Director Research at Profit Mart Securities, to just give us a sense and a guide for our viewers on how to pick the right IPO among all the options you have. So we'll show you those graphics on our screens. Cross, Tollins Tire, Bajaj Housing Finance, all of them out this week. Deven, let me start with you on which ones you would pick. Do you have a favorite ranking? Which ones do you think are worth applying to?
Well, good morning. Well, Bajaj Housing Finance clearly is a lottery. I think it's a stock I think which one should be owning in the portfolio. Important point, a pure focus housing finance company with variety of customer segments covered. I think be it loan against property, be it developers finance, be it mortgage finance, or be it rental discounting, and both, I think, for the prime sector housing as well as for the affordable sector housing. The business of the company is spread across. So 2-3 things comes out very clearly. On one side, India has a long headroom, long runway as far as the penetration of the housing is concerned. Today, we are just sub 10% of penetration. I think we could possibly grow as high as 60%, I think, in the mortgage lending business. So from the population, I mean to say. So from that perspective too, I think the runway is quite long, and anybody, I think, with a sizable, the better approach, I think, would definitely have the business to talk about. Bajaj Housing Finance, I think they have particularly set their meter right. I think they are growing the book at the rate of compounded rate of around 30%. Now, when you grow 30% compounded rate, every 3 years, you're growing the size to double. And that's where probably I think the business of the company remains more sure. We have seen the companies in past, wherever they have, I think, disciplined way of their producing the growth, they have actually produced enormous wealth for the investors. So from that perspective too, I think this model looks, I think, appealing to me. So on one side, business dynamics, definitely working good for them. Bajaj pedigree, giving them a good way to access the fund at a cheaper cost. On the other side, I think lending money.
Deven, but the problem is you started this sentence by saying it's a lottery. So it's all amazing, but you know, you're saying it's a lottery to actually get allotment. So then in which IPO this week do you have a better chance? Let me frame it that way, because you have PN Gadgil, you have Cross, you have Tollins. So should people look at some of the other options?
So Bajaj Housing Finance, I'll say lottery because I think here you are not going to get enough amount of allotment possibilities because of the rush. So even if you end up getting one, I think it's a lottery going to be for you. So certainly I think preference would be with Bajaj Finance. The other two companies, the Cross and Tollin Tires, both these companies are basically catering to the commercial vehicle segment as well as the off-road segment and the tractor segment in particular. Cross is basically more on the engineering side of the business, whereas Tollin Tire is largely on the tire side of the business, but catering to the same sector. So certainly I think there is a growth involved in it, but compared to the size is smaller. They're relatively, I think, the smaller companies. So obviously, some traders delight, momentum traders delight, as far as I think those kind of things are concerned. They are attractively marketed to at around 34% or 34 times price earning ratio, both these companies. So from that perspective, they are not expensively priced, and the CAGR growth in last 3 years has been smart for both these companies. So obviously, I think the momentum traders would probably find some merit in those two companies. Bajaj Finance, definitely, I think long-term investors delight as far as the portfolio choice is concerned.
Avinash well joins in with a view on some of these very hot IPOs. Avinash, what's the verdict on Bajaj Housing Finance? I believe the grey market premium is also indicating to an 80% premium already on this housing finance company. If one doesn't get an allocation to this in the IPO, do you recommend buying it on listing day, even if there's a 50 to 60% upside? And the reason I ask this is because while the fundamentals are solid, it's still a very expensive stock.
Yeah, I think, good morning, Samina. See, my guess is that this is an issue which is coming from the Bajaj Group after a very long time. And I think the Bajaj Group has rewarded investors quite handsomely Valuations apart, I think this company has got a great future. The runway for housing finance in India is extremely large, and I think Bajaj Housing is the second largest housing finance company. And with the kind of funding they get it, I'm quite sure that in the next say 2 to 3 years they should be doing a very large kind of AUM book and with a very impeccable asset quality. So I think your question whether one should buy the stock on listing because obviously this share, this issue will get heavily oversubscribed. Yes, I think if you've got the next 2 to 3 years in mind, this is a stock which has got to be kept in your portfolio. Please don't miss it. But you need to give in that much time because obviously when you buy a stock at 50-60% premium, obviously you're buying at an elevated level. But I think growth prospects seem to be quite solid. And I would not be surprised that over the next say 12 to 18 months, based on the kind of news flows the company announces, the performances the company delivers, the investors could still make a good amount of money. But I think over the next say 2 to 3 years, it's a portfolio stock. One should definitely stay invested.
Okay, let's talk about the others as well. And we briefly spoken about it, but cross, and I want a view from both. But Avinash, I'll start with you first. The CAGR performance, in fact, I was looking at a note from Deven Choksi Research, 44% CAGR for the last 2 years, remarkable ROCs for an auto anch. Is it expensive though, or is it something that you would subscribe to? Avinash, the question is to you.
I think, Neeraj, if you look at the longer term picture, they are into basically suspension trailers, machined components. And I think this is a very, high-end engineering kind of business. So I think despite the fact that the stock may appear a little expensive, if one were to take the next 2 years and see the kind of growth opportunity, then I think clearly, they've done a top line of 620 crores, a bottom line of around 45 crores. And as you said, the CAGR is almost 40-45%. So I think, if they continue to maintain this growth rate, then I think the markets could definitely be rewarded. And I would not be surprised that this issue could get a solid response considering the fact that this is a very high entry business. It takes a lot of time to become a well-established vendor. So, machining is a very high-end activity. So yes, from a longer term perspective, yes, even from a listing gain point of view, there could be a reasonable listing gain also for this stock.
And Deven, good morning. Lovely note by the way on cross. I'm just trying to understand. So listing gain notwithstanding, and let's assume that the listing gain happens as Avinash is saying. What about post that? Is this a company that you would keep in your portfolio, or are the other listed auto anchs giving you a better opportunity? Cross, that is.
Yeah, and Neeraj, good morning. Well, I think definitely other auto anchs are there in the portfolios, but the fact remains that I think this company is getting more amount of prominence. 2 or 3 reasons. Government is increasingly spending higher amount of money on the agriculture and agriculture related activities. So obviously, I think the sector in which they are present is largely the tractor, the farm equipment side of the activity, wherein I think the majority of the machine components are going into. So that is one area where we are reasonably sure about, I think, the kind of demand scenario getting generated. In fact, in last 2 years' time, if you see this particular growth, it gets validated that because of the larger emphasis of the government, I think this kind of companies which are up till now sleeping, I think they have started suddenly waking up because of kind of business they started attracting into. And I think given the kind of pedigree for a longer period of time that they are enjoying, I believe that I think the market is ready for the products I think which they are supplying to different OEMs as well. So from that perspective, we remain reasonably confident about the growth, at least if not more for next 3 years. And that's where probably I would like to think that such kind of companies which are relatively missing in the marketplace, I think they would probably find the presence. The off-road vehicle markets, the tractor, the farm equipment markets, they are the ones I think which are niche markets, and they're comparatively the margins remain relatively better as compared to, I think, the other peers. So to an extent, I think they should be performing better going forward. And as we have seen the improvements in efficiency, we believe that the margins are likely to remain a little bit on a higher side. Given the lower raw material cost advantage that they are now getting, is also going to be another factor which should be giving sufficiently good clarity for next 2 years on the margin front for this company.
Just Avinash, your view on Tollens as well. Tollens is the other one that opens today. Are you excited about it?
No, Tamanna, in fact, this is a company which is largely a tire trading company. 75% comes from tire trading business. And basically, the USP for the company is that it's situated in Kerala. They've got 3 facilities. So I think raw material problem is not there. And I think I was just seeing the numbers on a top line of 227 crores. They've generated a PAT of 26 crores, which is quite attractive. So I think, if the company is able to maintain these kind of margins and continue its business model, because tire retreading is essentially a very solid business. Very few players in the market apart from LG, which is a market leader here. So, in terms of valuations, the stock appears to be fully priced. But yes, if the company can generate a decent ROE and a kind of see a good performance going forward, then I think this issue would definitely get a decent kind of response. Most importantly, crude prices have started correcting. So I think that also should add to their margin. So we have given a subscribe to this issue for our investors, but yes, from a slightly longer term horizon.
Okay, Devin, about 50 seconds left for Gala Precision to list. Any thoughts on this one, the new listing today?
Honestly, Neeraj, I think haven't looked into very detail about this company, so probably I think take another chance to talk to you later.
Yeah, sure. Avinash, quick, same question to you. 40 seconds left. Anything on Gala?
I think, Neeraj, looking at the response the IPO got, I think one should easily expect a 50 to 60% kind of premium on listing. The company has done remarkably well, and I think the issue has subscribed significantly well. So I think at least expect a 50 to 60% pop-up on listing, and thereafter I think we'll have to see which are the marquee investors who actually buy on the first day. But yes, fundamentally company appears to be on a strong wicket.
Okay. Gentlemen, both of you, thank you so much for agreeing on a short notice to talk to us on the most active things here in markets currently, which is IPOs. And that's Gala Precision Engineering and a very happy promoter group ringing the bell. And well, let's see what the price is on listing. 72 versus 721 versus issue price of 529, which is a 43% uptick on listing. Not bad at all. It was expected, of course.
Thank God. I thought you were going to say, oh, just 43%. It's pretty good. I love the pictures of the promoter and their family ringing the bell. I think it's so sweet, and you actually get a sense of what a big day it is for them. And of course, we look at it purely from the point of what are the listing gains. 50% of the people who got allotment are probably going to sell it, but for them it's a big deal. So I like that bit of it. Yeah, the IPO market is hot, and that's where the FII money is also going, because at least some valuations still on the table.
Also, I mean, Tamanna, just before we wrap up the show, listing is such a special thing. You are taking birth on a stock exchange, your stocks will get traded, and we've seen enough examples of companies gaining 100, 200, 500 times in the course of their life cycle. Sure, one of the companies that have gotten listed in the last 1-2 years will probably go on to do that kind of gains as well and create wealth for itself and shareholders.
On the flip side, once you list, you're open to all kinds of scrutiny. We will be sitting here and looking through everything that you're doing in your company, and then it's a whole different ball game. But anyhow, a lot of listings in the offing, a lot of IPOs in the offing. We hope this conversation was useful for you. We'll wrap up India Market Open here, but stay tuned. Talking Point up next. We're joined by Mihir Vora, CIO of Trust Mutual Fund.
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% दिया है। यंग इंडियंस आर एस्पिरेशनल, और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल, टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying, investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है आज भी वो physical है. टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do cyber frauds, they are all growing. इसमें हमने बहुत अवेयरनेस क्रिएट किया। हमने अवेयरनेस थ्रू एडवर्टाइजमेंट्स, थ्रू टेलीविज़न, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया।
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your...
Thanks for tuning into Talking Point. I'm your host, Neeraj Shah. The case for a chat for our guest today is banking on financials the right bet under the current context? Is IT in for a bit of a turnaround? Because his bets seem to suggest that they are bracing for some bit of an uptick in IT relative outperformance relative to the past. Have aerospace and defense and some of the sectors which have run so well in the recent past finally run their course, or could there be more? And of course, because he looks at macro with as much keenness as micro, we cannot let Mihir Vora go, or we cannot start a conversation with Mihir Vora without talking about the global macro. He joins in on the show today. Mihir, thanks so much for joining in. I was really hoping that we do it in person, or maybe some other time. I understand you had to go to your office today, but yeah, some other time in person from our studios. But thank you for taking the time out, Mihir. And just such a perfect day to get you. We've seen the non-farm payroll data come out. And the interesting thing is that maybe earlier the market wanted weak data to lead to some heavy central banking action for the markets to do well. Now the market seems to be worrying that yes, there will be central banking action, but growth seems to be a problem, and therefore there is a worry out there too. How do you look at this curious set of events?
Good morning, Neeraj. Thanks for having me. Always a pleasure to be on your show. So market always wants Goldilocks, right? But you may not get Goldilocks all the time. So market wants the US economy to slow down just enough so that there is a justification for rate cuts, but not too much that it goes into a recession or something like that. So that's something that you know is wishful thinking. My base case is that the US continues to slow down because if you look at the overall macro picture in the US, the excess savings of the households has actually been depleted. The excess savings that we saw because of the COVID stimulus, that is depleted. So you can't continue to expect the same kind of traction in retail sales, services, etc., that we have seen in the last 2-3 years. And you know, the farm rolls data and the other data points in the last few days that we have seen, especially on the job creation side, there is a distinct sign of slowdown. So I think my base case is that the US continues to slow down as far as the retail consumption, etc., is concerned. So you may see some downgrades on that space. On the flip side, that may not immediately lead to technology spending because corporates have still made a lot of money. You are seeing earnings resilience in the tech sector, at least so far. So you may not see the immediate impact for Indian IT services. But for the global economy, as far as commodities are concerned, as far as general goods and services trade is concerned, you can see some slowdown.
Got it. Okay. So, Mihir, there is a slew of central banking decisions. I think we have ECB this week, and the Fed may be following some of the European central banks. Based on your base case of the US continuing to slow down, but we're also looking at Fed action, even if it's just 25 bips or 25 basis points in the current policy, but maybe some more in the times to come. What is your stance on risk assets in general? We'll come to India valuation specifically, but I remember you telling me that central banks have been the driving force behind market moves ever since COVID lows. Does that continue to be the case, or would you be skeptical on risk assets?
I would be a little circumspect, but not necessarily for, say, flows to emerging markets, because what the banks are trying to do is make sure that the dollar does not appreciate too much or depreciate too much. But if the pace of rate cuts in the US is faster than the rest of the world, then you might see a gradual depreciation of the dollar against the major currencies, which can lead to a little bit of positivity for the risk assets. But my observation over the years is that ultimately it's growth that matters. And if the rate cuts are happening in a slowdown cycle, then it does not necessarily have a salutary impact on risk flows. I think the fundamental requirement is growth, and if growth is slowing down, then you can see some volatility and some uncertainty for sure.
Got it. Now, just trying to figure out what happens sectorially, and I'll come to individual themes or individual ideas in a bit, because I see some of the changes that you presumably have made to your portfolios too. So I would have some questions there. But before that, is it a turn for some of the lesser performing names which are trading at better valuations to make a bit of a comeback cyclically, and for some of the ones which have done really well in the last 12 to 18 months to take a bit of a breather or maybe even correct? Could there be a barbell strategy of sorts?
So I think the base thesis and the themes would remain the same. We've discussed this in the past, that we are more bullish on the domestic economy compared to the rest of the world. So that base case remains. Within that, we are still of the view that the financialization of savings and premium consumption will structurally continue to do better. And a physical asset creation, which includes infrastructure, manufacturing, real estate, will continue to be the focus area for the markets. The other one is, of course, that new business models will continue to get evolved. We'll see a lot more companies with these new age, new tech companies, which will be an interesting space to watch out for. So these 3-4 themes, I think nothing has changed in the last 4-5 months. That for us, that remains. Within that, what has happened is that while, say, 1 year ago, 2 years ago, some of the manufacturing themes, defense, etc., even railways themes were relatively unknown and under-owned in the institutional portfolios. So, of course, they had a dream run. We saw many multi-baggers in that space. But now I think we probably overshot a little bit, and typically, when you have too many thematic funds in a particular segment coming in, it means that the sector is now well discovered. So to that extent, in the last 4-5 months, we have seen a slew of funds in this physical asset creation space, manufacturing, defense, etc. And stocks, of course, did run up and make a peak. So I think for the time being, while we are very, very bullish on these segments in the medium term for 3 to 5 year view, probably stocks had overshot and there's a bit of a correction. So in the last couple of months, we have reduced allocation purely based on valuations. I don't see too much of a threat to earnings, but purely because of valuations overshoot, we have reduced space in some of these segments. Over the last 2-3 months, what has also happened is that we are incrementally seeing some positive commentary from the companies which deal in the rural markets. So it's not like all gangbusters and things doing very well. But if you look at some of the data points like apparel consumption in tier 2, tier 3, tier 4 towns, commentary from some of the FMCG companies, there is a feeling that probably the worst of the slowdown in the rural consumption is probably past us, and on a good base with a good monsoon, we should start seeing some pickup. So rural consumption was something that we were negative on, but probably we are getting incrementally more positive, and we've kind of added a little bit of exposure in this theme. So that's one thing to look for. I think rural versus urban consumption wise, rural incrementally may do a bit better. Urban still is a mixed bag. Cars are not doing that well. Rural two-wheelers, which are rural play, are doing well. So I think rural versus urban, rural is beginning to look a little bit better. The other big one actually is financials, where we do see a theme where the market is expecting rate cuts. But the impact of rate cuts will not be uniform in the short term. So to that extent, the markets are kind of rewarding lenders which have a predominantly fixed rate book, and that happens to be typically the NBFCs. So within lenders and non-lenders, so on lenders we have banks and NBFCs. Non-lenders we have a host of companies in the capital markets, insurance, wealth management, broking, asset management space. So that's the non-lenders. So we are more positive on non-lenders to start with because it fits in with the financialization of savings theme for us. So we have more bullish there. And within lenders, within bank and NBFCs, at least for the medium term, not medium term, I would say short term, we are a little more positive on the NBFCs because a lot of the NBFCs have a fixed rate book. And when interest rates come, the liabilities will get repriced downwards and immediately. Assets will take a little bit of time. For the banks, the most of the book is floating rate. So the assets will get repriced faster. So you might see a little bit of compression for the short term for banks. So tactically, I would be more positive on the NBFCs within the lending space.
Okay. So, well, viewers, that's the whole gamut of things. I want to start off, though. I'll talk about defense in a bit. I want to start off with the global facing sectors, IT and to an extent, pharma. Now, I heard you say that you believe more in the domestic themes and less on the global facing themes. But I do see, and correct me if I'm wrong, but relative to June, in July, your exposure to IT has increased from what, sub 6% to maybe around 9%. Is that true? And if so, why is that a bet when you are more focused or more constructive on domestic?
Sure. So that's more of asset allocation based on the profit booking that we did in some of the sectors that I mentioned. So, for example, while we continue to be very positive on defense, infrastructure, manufacturing, etc., we had a huge exposure to that segment, which we have trimmed dramatically. We almost had 20+% exposure, which we have in the last couple of months trimmed down to about 10%. So that the reallocation of that 10-12% that we do, some of it obviously went to IT where we were significantly underweight. So you can say we're not like very positive on IT, but we've significantly reduced the underweight position that we had.
Okay, but you're not too constructive on IT. This is just a reduction. Okay, what about and before I come to pharma, what about within IT pack, Mihir, IT services, ER&D, and we have some of the tech plays which are more domestic focused, and we've seen the kind of gains that the Zomato, PB Fintech, now even a Paytm is reviving, etc. And then there's some of the others too. Within this bucket, and I'm presuming that even the domestic tech plays form a part of this 9%, correct me if I'm wrong again, where is it that you are more constructive on within these buckets?
So I don't really treat these new business model companies as IT per se, because they are more consumer companies in my view, because they face the consumer and use technology, of course, to reach the consumer. But for me, they are more of consumer companies. So we are very constructive. That's one of the things that we are definitely playing on, this new business models. So that's a definite plus for us, yes for us, overweight. Within IT services, I would say it's a stock pickers market, but in general, if I were to look at the top 4-5 companies, we are talking about at best single-digit kind of growth. My view on the large companies is large IT services companies is that we will revert back to pre-2019 growth rates, which is again single digits for the medium term. The spike that we saw because of COVID spending on IT by US corporates is past us. So on that base, I don't think they've not, let's face it, they've not tweaked the business models dramatically to give us the confidence that they are going to grow faster than what they did in the past. So to that extent, it'll be a good, predictable, medium growth, medium expectations kind of sector. But if you expect the Indian economy to outperform the rest of the world, then you probably don't want to be very overweight on the large IT companies. In the mid and small cap IT space, IT services space, there are companies which have different target segments, as you mentioned, ER&D. There are companies which focus more on BFSI. So my guess is that you might see some more attraction on the BFSI spending space in the US after a long time. AI probably will give some opportunities for some of those companies. So I would say that IT will more for us be a stock pickers market, where we would like to pick stocks in the mid-cap space rather than go very over on the large IT companies.
Got it. Now, pharma is in focus. Before I go to Mihir on his thoughts on pharmaceuticals, there are some news announcements that have come in today. It would be good to get in my colleague Varsha to give us a lowdown of what have been the latest developments and what are the stocks that are moving as a result of that. Varsha, good morning.
Good morning, Neeraj. So, few of the pharma stocks are actually under pressure. Now, let's start with Lupin, wherein Lupin is facing a legal challenge related to its generic version of the drug, which is used to treat kidney problems. Now, the original maker of this drug, which is Otsuka, is challenging a recent court verdict that favored Lupin's generic version of the drug. And the Lupin was expected to launch this product in April 2025. However, this new appeal introduces uncertainty whether Lupin will be able to launch this product or not. Now, the primary product for the innovator is contributing almost $1.5 billion of revenue for the company. So that's the market that Lupin was actually targeting. Let's see what Citi has to say. So Citi has a sell rating for the stock with a target price of 1700, implying almost 24% of the downside. Citi says that Lupin may choose to delay the launch of this generic drug, and the company may not capture as much as market compared to a typical launch that was expected. And this will actually impact significantly to the Lupin's financial numbers, as Citi was expecting a 30% contribution from this product in FY26. And then we have Granules India, wherein they've got 6 observations from USFDA for their Hyderabad plant. The inspection was from August 26 to September 6, and this facility is actually crucial for Granules and contributes. So major contribution comes from this facility and is crucial for manufacturing finished doses and the intermediate products, and it also supports global operation for the company. We don't have the revenue contribution, but we do have the capacity. It has a capacity of almost 23,200 tons for intermediates and 26 billion units for their finished doses. Then we have Suzlon Pharmaceuticals, wherein USFDA conducted inspection for their subsidiary plant, and which was categorized as VAI, that is voluntary action indicated. That means that USFDA has found some lapses, but those were not severe enough to take any kind of action, and the company is therefore expected to take the voluntary actions for these regulatory approvals.
Thanks a lot for that, Varsha. Mihir, pharmaceuticals, the price action seems to suggest that there is a bit of flow into some of the specific pockets. But the US generic makers have already had a rally in 2023 too. Are you constructive here, or are you part constructive? Would love to know.
Pharmaceuticals, we are constructive now compared to say 4 months ago. Couple of things. Structurally, the sector did go through its ups and downs in the last 4-5 years. But I think the worst of the generic pricing pressures are most likely past us. So that's one good thing for the generics companies. But I think post-COVID, what has also happened is that a lot of companies are now looking for the CDMO opportunity for India, the CRO opportunity for India, because like it or not, people have realized that we need to, for the sake of security, diversify away from China. And China is really big on CDMO. So I think apart from the generic opportunity, the CDMO opportunities have also opened up for Indian pharma companies. And that's the reason why we do think that in the next 3 to 5 years, this sector should do quite well. The good thing about the sector is that you also have companies with a predominantly domestic exposure. So there's a wide basket to choose from. You can choose companies which are more like FMCG companies because they do the local markets. You can choose the generic companies, or you can choose companies which are in the research and CDMO space. So there's a whole gamut of companies to choose from, which makes it a interesting sector.
Okay, and watch out. So again, because it may be a very bottom-up theme here in pharma, but also from sectorally divvied up, right? Healthcare very divvied up, CDMO as you said, or pure pharma, or even other facets of healthcare. Is there a first amongst equals there? Is there a theme within pharmaceutical that you like more versus some of the others?
Sure. So if you look at the incremental target markets which are opening up, I would say it's the CRO and the CDMO space, because that's something that not many Indian companies were focusing on. And this is something that's opened up in the last 2-3 years, because the multinational companies are actively looking to source from India. So that's one space where we can see incremental action.
Okay. Remember, viewers, by the way, me, just one quick follow-up there. I don't want to make this entirely pharma discussion. One last question on China, but one quick question. There's a lot of talk of the Biosecure Act being passed in the US this week and the impact that it could have on CRO, CDMO. Is that something which is very big, or is it something that is difficult to analyze right now?
No, it is a significant. It's a significant move. You may not see the impact of it in the top lines of companies for 1-2 years, but structurally it will open up a whole new, opportunity. The target market incrementally can be quite large.
Got it. So significant, viewers, but not immediately. Now, Mihir, one final word, and I started with macro. I'm ending with macro. The only difference is I started off with the Fed and central banks, and I'm ending with China. You look at these correlations very, very closely. I would love to know, China deflating the way it is and the impact that it has on growth globally, because it's such a large portion of the global economy, and the impact that it has on commodities per se as well, because it's such a huge guzzler of commodities until it started deflating. What is the slightly medium-term impact that you foresee if China continues to deflate the way it is currently?
Specifically for commodities, you are asking?
In general and in commodities both. I would love to pick your brains on everything that you think about when you think of China.
Sure. So first of all, I don't believe that China GDP growth is going to come back for a long period of time, just because they have peaked out in terms of working age population 4 years ago. Second is they have also created all the infrastructure and real estate that they need. So there is a huge oversupply of infrastructure. There is a huge oversupply of real estate in China. And both these, of course, are huge guzzlers of commodities. So it's not a very good scenario for Chinese consumption of commodities. And China happens to be half the market, or 70-80% of the market in certain commodities globally. So I think commodity price inflation is not going to come back in a hurry. That's my base case. The other risk that you rightly pointed out is that because China needs to keep supporting its growth, and if you can't build more infra, if you can't build more real estate, what do? So they are ramping up manufacturing, and they are ramping up manufacturing not only on the commodity plays like say your luggage and toys and stuff like that, but they are actually going high tech also. So that, I think, in terms of deflation, will continue structurally, and you will see China becoming more dominant. The hope is that, of course, in companies like India, Vietnam, etc., will come up as alternate manufacturing base to China. But China is not going to let that go easily, because they also need to keep growing. So it's going to be a race, and while we are very positive on Indian manufacturing, etc., it's not like it's going to fall in our laps without us doing anything. We really have to work hard towards it.
So therefore, okay, just final quick 30 seconds or 60 seconds. If China does expand its manufacturing capacities the way it did in the past, or maybe more than that, and even if there are duties, if goods which are cheaper land in neighboring countries in a much lower cost, then it has an impact on product price inflation for manufactured products even in India, right? Even if there are duties on Chinese imports. Does that therefore make the attractiveness of the Make in India story slightly lower?
See, we'll have to be smart about it, and I think the government also realizes it. So you have, for example, of course, duty is there. We'll have to be smarter about the free trade agreements that we are signing. For example, you can't, let other countries act as a conduit. And third is that there are non-tariff barriers that also what we have seen from time to time that the government use, like BIS hallmarking, etc., which kind of is not, which makes it a bit difficult for Chinese companies to import, etc. So I think there is awareness within the system, and PLI is another way of countering it. So on one hand you have tariffs, and on the other hand you have kind of PLI incentives for manufacturing, which makes it cheaper. So I think we are trying to go about it, from all sides. And we are seeing good progress. At least the last 2, 3, 4 years have been very heartening in terms of electronics and a lot of other sector. But as I said, you can't be sleeping at the wheel. We'll have to be continuously vigilant and proactive.
Got it. Mihir Vora, such a pleasure talking to you. Thanks so much for taking the time out and being with us, and look forward to talking to you in person soon.
Absolutely. Thank you so much.
All right, that's Mihir Vora of Trust MF. With that, it's a wrap on this leg of Talking Point. Thanks so much for tuning in.
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% दिया है। यंग इंडियंस आर एस्पिरेशनल और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल, टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying, investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है आज भी वो physical है. टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do cyber frauds, they are all growing. इसमें हमने बहुत अवेयरनेस क्रिएट किया। हमने अवेयरनेस थ्रू एडवर्टाइजमेंट्स, थ्रू टेलीविज़न, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया।
When the whole day passes like a blur, the news just whizzes past.
Hello and welcome. You're watching the F&O show, and over the next half an hour, we'll take you through all the F&O action in the markets. A quick check of how the street is doing. Friday was a tough day for bulls on the street across Nifty and Bank Nifty. This morning, though, the picture not looking as bad as we'd have thought. Nifty 50 pretty much at the day's high point, trading flat with a cut of only 16 points. A quick check on how the picture is playing out. The Nifty futures are trading in a premium, and that's what we're picking up on right now. And of course, if I can quickly get a check on what the open interest picture looks like. Open interest seeing a slight decline, indicating that the upside potentially on the Nifty could be capped. Across Bank Nifty, though, the picture is slightly different. Bank Nifty, which has or was the best performing index up until Thursday, turned out to be one of your top losers after Friday's trade. Nifty Bank trading at a good premium of 200 odd points. Open interest also seeing a marginal increase, indicating that there could be some more, or rather there could be a bit of a trend reversal on Bank Nifty, and that is evident in the way Bank Nifty trades right now. Nifty Bank trades with marginal cuts and oscillating between gains and losses from the way we look at it, not doing too badly on Bank Nifty for now. The breadth of the market's not too bad either. It's actually improved substantially in the last 1.5 hours or so. You still have a handful of losers, but on the gaining side, there are a few stocks that are seeing some pickup in interest, largely coming in on pharma and FMCG. So while defense may not be a theme, defensive stocks is what you could see some traction in. Across the broader market universe as well, what we are seeing is stock-specific trade largely coming in terms of news that's driving some of these counters. But the top few gainers on the Nifty 50 come in from the Nifty 500 come in from the pharma pack. Glenmark is up 4%. Alembic is also trading with a gain of 3.5%. You've got a few other names like Narayan Rudalia that trades with a gain of 2.5%. Some gains for Eris Life Science, Jubilant Pharma Nova, Gland Pharma also trading marginally higher. On the sell side, a couple of names that are shooting up in terms of losses are Chipeta Wagons down 6%. Godfrey Phillips post that board meeting and being Al Modi turning out to of course controlling stake of the company. The stock is seeing a big cut of about 5.5%. Raymond Lifestyle hits lower circuit second straight day after listing, down 5%. PFC, Raymond itself is trading lower. ONGC, Prestige Estates, fertilizer counters all trading with a clear downtick in today's trade. What you also want to be a little mindful of is that the markets are currently lacking any sort of fresh triggers domestically, and internationally the big Q really is the Fed rate cut on the 18th of September, but it seems like we would be between now and then reacting largely to global cues in terms of trade. The Nifty Sensex are off the day's low point, and that's what I'm taking a little bit of heart from. Well, we have with us our guests who are now joining in with their F&O strategies. But just before that, we will talk to, of course, that's of course the queries that are on my screen, but if I can quickly get the names, we've got Vinay Rajani and Aditya Arora both joining in with their trading strategies. I'll start with you first, Aditya. What is the trade on the index? Nifty futures are in a premium, but the OI is still showing a downtick. Doesn't seem like there's much of a trend reversal, at least on Nifty for now.
If you look at Nifty futures, then I think market are rebounding pretty smartly. But we can't trust the momentum, because yesterday also, on Friday also, we saw a lot of zigzag movement in Nifty. Same is true for our markets and international market. So can't trust the movement right now, but we can have level-based approach in the market. Important support for Nifty should be 24,700. Until that is not broken, one can actually play this rebound trade in the intraday. And if 24,700 is broken, then probably a severe downside could open up in Nifty.
Vinay, what about you? What is your strategy on the Nifty? I mean, it's trading flat and we seem to be doing better than the rest of the world this morning, but no clear signs of a breakout, or at least the good news is there's no breakdown as well happening just yet.
Yeah, so follow-up selling is missing somehow. On Friday, Nifty closed on a weaker note, and Bank Nifty, in fact, continued to underperform. But Friday's close was below the 20 days exponential moving average. Right now, the 20 days exponential moving average is placed at 24,900. Today's high is almost around that level, so that is the immediate resistance, we can say. And going by the data, in last week, we witnessed a short build-up in the Nifty as well as in Bank Nifty. So Bank Nifty, if we go by the only Friday's data, Bank Nifty witnessed some short build-up as well, and in Nifty we witnessed some long unwinding. So overall, Bank Nifty is looking weak. Somehow today it is showing some resilient movement, not falling that much. And till now, so far so good, we can say it is trying to sustain. But we need to see whether Nifty is able to cross 25,000 to 25,100. Strong resistance is there, because call writing happening at that strike 25,000, 25,100. So that is a strong resistance that Nifty is going to face resistance there. So downtrend is still there. No doubt from the lower level it has recovered a bit, but it is too early to say that it is a reversal. So better to remain with the overall trend. Overall trend has been bearish. And what we advise to our traders and clients is to maintain the short position with the stop loss of 25,100. Unless we see any decisive level above that, the view for the market remains bearish. And as far as Bank Nifty is concerned, Bank Nifty is likely to underperform only, and Bank Nifty has got very strong resistance around 51,000, where maximum call writing has been seen and witnessed. So that is a strong resistance. So that could be a small bounce, but unless we see a decisive level above 51,300 to be precise, we are cautious on Bank Nifty as well. So today we need to see how this market reacts. So, but it's too early to say markets have reversed. So better to wait for some resistance levels to cross to take a bullish view. But otherwise, we are right now taking a bearish view and a sell on rise view as far as intraday view is concerned.
Quickly, Vinay, so is it a fair assumption for me to make that you're recommending fresh shorts at this level, or you're avoiding, or you're indicating to avoid at these levels, either on the long or short side? Or could fresh shorts be taken up?
Yeah, so I would go by today's low in Nifty. Today's low was 24,753. If that is broken again, then definitely fresh shorts position can be looked at. So below 24,750, I would go short with a stop loss of 150 points, and downside target could be 300 points. So that is a trigger level conditional view I'm giving. So below today's low of 24,750, I'm giving a bearish view, and one can initiate fresh shorts below that.
Only if today's low gets taken out, a fresh short should be initiated. That's the word coming in from Vinay. Aditya as well not too convinced about the Nifty and Bank Nifty. Well, we'll do a quick detour. Gentlemen, stay with us. We've had Gala Precision that has listed today at a 40% premium to its issue price on the exchanges. We did have the opportunity to talk to the management on their issue and what they would be doing with their IPO proceeds and margin outlook. Let's listen to the slice of that conversation.
So basically, we are in three product categories, as you said, disc springs, coil springs, and fasteners as well. We cater to three geographical markets: India, Europe, and USA. And we address three market verticals, which is renewable energy, where wind turbine and hydro turbines are our customers. Then we address industrial, where mainly electrical customers like ABB, Schneider, and Siemens and all. And then third category is mobility, where we address automotive as well as railways, where our customers are Schaeffler and Valios. And in railways, we have public as well as private sector companies as our customers. So the simple business models is, around precision components for these industries, for global OEMs.
Okay, so precision component manufacturing for global OEMs across the three industries that you've mentioned. Now, I want to come to your objects of the issue you've raising about from the fresh issue proceeds of about 135 crore. You plan to set up a new facility which is near Chennai, and again, additional capex would be required in your existing Bada manufacturing facility. I want to understand what is the additional capacity that you are expecting from the new unit, and also when are we expecting to make this plant operational? Mr. Jalan, I want to come to you on this question first.
Sure, very much. So out of the new equity which we are issuing, 135 crore something will be toward the fresh equity, and we will be deploying 37 crore for new facility at Chennai, Vallam, Vadgalam. And the capacity in the rupee term will be approximately 110-120 crore, which will be generating from this capex, all put together. We are expecting to start this facility by end of this last quarter, FY25 Q4 quarter. From the capex which we are putting in our existing facility at Vada, which is approximately 11 crore, we are seeing the additional turnover will be approximately 40 to 45 crore from this additional capex.
I want to understand now, with the additional capex and the revenue turnover, what is the kind of growth that we are projecting in FY25 and even in the next 1 to 2 year scenario, if you can expand more on that space?
Sure. So basically, if you see that historically, in last 3 years, we were able to grow at almost a CAGR of 25%, and the type of the market which we are catering, the new market, fastener, particular for fastener, we enter into. We are seeing considering the market, the capacity what we are putting up, we are expecting the similar type of growth in coming years as well.
Okay, so a similar growth level that we should be looking out for. Now, what is interesting is your margin profiles. There has been a consistent pickup that we are looking at. Last 3 years, 15% mark. From 15%, we have seen this reaching to the 20% mark. Firstly, I want to understand whether the margins will sustain at similar levels, and considering your margin profile, the gross margins have remained in the 59%. So where are the key additions that we are looking at? What are the key growth drivers that is leading to this margin expansion?
Yeah, so basically, as Gala mentioned, we are in three vertical, industrial, renewable, and mobility, and we have more than 40%, around 40% export. So the mix of the margin which comes from the different end industry, different end customer, India market, global market. Considering the all in coming year also, we are projecting the similar type of gross margin, similar type of EBITDA margin of 18 to 20%.
Right, that's of course Priskin that has listed, Gala Precision that's listed on the exchanges today. A quick check on the stock. It had a stellar debut and continues to do well despite the broader market sentiment not being too supportive this morning. Vinay, let's talk stocks. What are your trading recommendations for our viewers this morning?
Yeah, so I would go short in the Navin Fluorine, which is a chemical company. It has been downtrend. The primary trend has been bearish with the lower tops, lower bottoms, and after some pullback, it has started its downward journey again. So I feel that Navin Fluorine, which is a part of F&O stocks, can be shorted here. So I would recommend selling a Navin Fluorine September future around 3260. I'm recommending a small stop loss of 3320 on the higher side. On the downside, I'm expecting a downside target of 3165. So this is a recommendation on the short side. The long side, I would go with the MGL. So this city gas distribution companies have been showing strength. The stock is trading and hovering around its all-time high and has been resilient in the downfall of the market. So I feel that this space is likely to outperform, and MGL is looking very strong on the charts. I would go long in MGL September future around 1855. I would recommend a stop loss at 1820 on the higher side. I'm expecting a target of 1910. So the time frame for both the recommendation would be 2 to 3 trading sessions.
The markets have actually turned positive in the last few minutes. We're pretty much at the day's high point on the Nifty. 24,881, 30-point gain on the Nifty. The Sensex also trades marginally higher, and Bank Nifty is seeing a gain of 0.3% as we see it. So it's not too bad anymore. At least there's been an improvement from early trade this morning. Aditya, what about you? What are your top stock recommendations for our viewers this morning?
Right. So we are seeing this kind of a seesaw movement since last few days, and market is very divided. There's one segment which is clearly underperforming, and there's another segment which is clearly outperforming, but steadily, step by step. So one of the sector in that category is Nifty FMCG space. I picked up two stocks from the same category. The first one is ITC, which is not correcting in the declining market, but consolidating. And when market becomes little steady, it slowly inches up. So over here, we have a bullish strategy on ITC. We can buy 505 call at 9.95. We can sell 515 call at 5.75. Maximum loss potential over here is 6,720, and maximum profit potential is 9,280. So that's my first strategy on ITC. And second one is also from FMCG basket, which is Marico. Today it's showing little resilience and bouncing back from the support level. So we have a bullish strategy on this one. We can buy 670 call at 15 rupees, sell 680 call at 11.25. Maximum loss potential is 4,500, and maximum profit potential is 7,500.
Well, those are a few strategies coming in from Aditya, trades that are looking good. I'll quickly go across to our viewers now who've been writing in with their questions. Sai from Kerala has written in. He has the Nifty 25-100 call at 226 premium, September 12th expiry. Vinay, you take this one first. What do you recommend Sai should do with his open positions on the Nifty?
Yeah, so it's a simple, as I said, that today's low is a very strong support from the where we have seen a nice bounce back. So if he is holding long positions at 24,000, I hope he is long, right? 24,000 call, 24,100.
Yes, that's right. He is long.
Yeah, so I would recommend him that today's low should be kept as a stop loss. If today's low is again broken, then one should cut their long positions. So definitely, and there is a strong resistance around 25,000, 25,050 band. So around that level, one can exit the long position.
Well, that's the recommendation coming in from Sai this morning. The other one that I have is Parthiban from Ooty writes in. Parthiban currently holds Dr. Reddy's September 6,800 calls. Aditya, should he hold this or exit?
I think the way today Dr. Reddy came up and then declined from 6,700 to 6,600 is showing a sort of negative momentum. So I would say he can go light on this position. And if he has to rebuild the position, then let stock break today's high, which is placed at 6,715. So once the stock goes above 6,715, he can be a little more confident about the position. Otherwise, the stock is showing a little bit of decline today. So I'm less optimistic on the upside.
The next one again, so it's interesting that most of the strategies this morning are from the option side. Tejas from Nasik writes in, and he's got M&M, Mahindra & Mahindra 2,700 calls at 61.4 rupees. Again, Vinay, what do you recommend Tejas should do? If you look at the charts of M&M and the performance of the stock recently, what is the recommendation? This is for the September series.
Yeah, so it is not into a clear-cut uptrend. It is still trading below its 20 days EMA. The other indicators are also showing a bit bearish scenario. So no doubt from the lower level, it has bounced back 60 rupees from the today's low. But at higher level, one should exit the long position. This is the stock which is not looking that strong on the charts. No doubt today's low is important. But I would recommend that 20 days EMA for the stock is placed around 2750. So once that level reaches, one can exit the trading long position. So he's having call options. So I would recommend that wait for some more rise, 40-50 rupees upside could be there where 20 days EMA resistance there. So 2750 is a very strong resistance around which one can exit the long positions.
Well, banking has been in focus, and AU Small Finance Bank has been one stock that's been rather active all through last week. We have a query from Aditya Sharma, who writes in from Delhi, and he says that he's got AU Small Finance Bank 650 rupees puts at a premium of 8 rupees. What do you recommend he should do, Aditya, on AU Small Finance Bank for September?
650 put is little far away from the current market price of 707. So there's good likelihood that there could be some decline in the put premiums because the stock is showing very good resilience since last few days. 3 days back, it was trading at 670 and it hit 720 in such a declining market. So I think buying a put is a sort of less favorable strategy, given that there's no technical breakdown as of now. If he really has to get into this trade, then let stock break 670. Then a negative momentum or trend could start in AU Bank. Otherwise, right now the stock is making a higher high, higher low, which is technically a positive sign.
You know, Aditya had a long trade on ITC. When I want to get your view as well, because it'd be nice to have a consensus view on a stock. And I bring ITC up because it was a constructive trade by many analysts all through last week. It held out quite well till Friday morning, saw a big fall, and now pretty much at the day's high point. Do you concur that ITC may be a good long trade for our viewers?
Yeah, so I'm expecting ITC to outperform. At least in falling market, it can fall less, and in rising market, it can outperform definitely. So right now, if we go by the 2-3 weeks view, the recent view, so recent past has been consolidation. No doubt it has been resilient. FMCG sector has been doing good. So not only ITC, but HUL, Colgate, and the Britannias of the world are also doing very well. So yes, ITC is looking strong on the charts, but I don't think one can earn through the momentum like a call option in the category, because this particular stock is right now into consolidation in an overall uptrend. So it requires a clear-cut breakout from the consolidation. There is strong resistance around 550. So once that is taken out, we can expect some more momentum to come in. Otherwise, this stock is likely to remain strong, but right now into consolidation of 515 to 495 range, 20 rupees range is there. So yes, I'm expecting outperformance. But momentum would be again there once the 550 level is taken out on the upside.
The Nifty has done a good recovery, 0.2%, 0.3% higher on the Nifty. 24,900 has been reclaimed on the index for now. Aditya, and one more stock that I want to talk about, because again, it's been a large underperformer in the IT pack. And if there is still a belief that IT will outperform the index, would it make sense to go with a Wipro? It's been an underdog, and I'm guessing if there is a recovery, there may be a little bit of a catch-up rally on Wipro. It's trading, again, at its day's high as we see it right now.
Right, so Wipro today tested its important moving average at 515. So that now establishes an important support for the stock. And to be little liberal with the levels, then one should keep 510 as important support for the stock. Until that is not broken, probably there's scope for some recovery over here, as we are talking on a very minor time frame and minor levels, 1 to 2%. So 510 to 515 is the support, and upside levels which one should watch out are 530 to 535.
Right, thank you. Thank you, Vinay. Thank you, Aditya, for joining us this morning and sharing with the viewers trading strategies. that they're looking forward to. Well, we'll move away from equities to commodities, and it seems like that market is also giving out a lot of opportunities for trading, for traders. Ajay Kedia of Kedia Advisory now joins in. Ajay, let's start with gold. It's been consolidating after recent highs, anticipating pricing in an aggressive rate cut from the Fed on the 18th of September. Currently in its consolidation zone, do you think it becomes a great buy opportunity? Because August gold was quite the star.
Yeah, very good morning. Definitely September would be a landmark for bullion, we can say, because in August month we have seen a gain of almost 7% nearby, and still we expect this long-term view for gold will remain bullish only as dollar index is continuously losing its strength, and even in September we can see a rate cut. First time in last few years we have never seen this type of aggressive rate cut scenario from Fed. So we are expecting, market is actually expected 0.25 rate cut has been discounted in the market, but now the probability is very high that there could be a 0.5 rate cut, and which is going to be supportive for bullion. Since last 10 days we have seen gold prices on M6 trading in a very narrow range of 71,000 as a support and 72,100 as a resistance. So still we expect ahead of this big data point, we expect market is going to be in a choppy range. For today, we would prefer to take a long at 71,400 with a stop loss of 71,200. Upside would be limited, but 71,800 could be achievable.
Ajay, you've got a similar long trade. In fact, you've got a long trade across all commodities this morning. On silver as well, at current prices, you're advising traders to go long?
There are many points which preferred me to take a long in all commodity, particularly silver. If we see up till now, gold-silver ratio was moving forward to closer to 90, which was been a major reason of underperformance of silver. But now I think $28, $29 is been trading in a very narrow range. On M6 also 82,500 is acting as a very strong support. As gold is getting support, some kind of support would be preferred to get in silver also. Looking to same, we prefer to take a long at 82,500 with a stop loss of 81,800. Limited upside, but 83,800 can be easily achievable in today's session.
Crude as well has seen a big fall, Ajay. There are supply concerns, recession worries, but I believe you're expecting a trading bounce back on crude. Is that correct?
Yeah, I think a technical pullback is expected because last week it is very much clear now. OPEC members that were insisting of a production hike, and they are still insisting that in 2025 we would be increasing our production. But right now we have already heard this. They will be postponing this up to December 2024. So I think that could trigger a technical pullback, and we have never seen since December 21 Brent prices went below $70 mark, because as soon as Brent will below 70, it will impact the producer and they will start cutting down the production. So last week we have got a support at 70, 50, 71 nearby, and I hope this is the period where consolidation would be there in the market. So looking to this, I would prefer to take a technical bounce around 57.41 can buy with a stop loss of 56.50, and target could be 58.80 on the higher side.
A quick trading call on copper and zinc as well, Ajay.
After August month's rally, we have seen prices has started moving down as demand concern from China is still prevailing, but technically market seems to be getting support. So copper preferred to take long at 780 with a strict stop loss of 776. Technical bounce towards 788. Similarly, zinc around 253 one can buy with a stop loss of 251. Immediate small bounce could be possible towards 256 on higher side.
Ajay, we're out of time, but thank you very much. Just to add two more strategies Ajay is recommending, he's got a buy on aluminium and a buy on lead as well. The target for aluminium is 220 and the target on lead is 182.50 paisa. With that, we are completely out of time, leaving the markets pretty much at the day's high point. A good recovery has played out in the last couple of minutes. Stay with the channel. There's a lot more programming on the other side, so keep it with us.
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% लिया है। यंग इंडियंस आर एस्पिरेशनल, और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल, टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying, investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है आज भी वो physical है. टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do साइबर फ्रॉड्स, दे आर ऑल ग्रोइंग। इसमें हमने बहुत अवेयरनेस क्रिएट किया। हमने अवेयरनेस थ्रू एडवर्टाइजमेंट्स, थ्रू टेलीविज़न, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया।
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow, the newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with.
Hello and welcome. You're watching the Small and Mid Cap Show. I am Mahima Vachrajani. With me is Harsh Saita, and we're also joined by Megha Barve, who tracks the first management that we have on the show, that is Deep Industries, very closely. But before we move on to that, let's take a quick check on how the markets are doing. Well, the Nifty and Sensex both have an extremely wide range of trade today. The Nifty has roughly 170 points of range, which has been range bound in the past 1 week, and roughly 20 points away from its day's highs right now, up around 0.2%. The Sensex has a wide range of 550 points today, and currently just 80 points away from its day's highs and up around 0.2%. So in line with Nifty 50 as well. But the broader markets today are under a tad bit of pressure. The mid cap 150 is down around 0.4%, and the small cap 250 is almost down 1% as we speak. In terms of Bank Nifty, let's also pull up what Bank Nifty is doing in trade today and see what impact the trade has in terms of Bank Nifty today. Well, the index has remained quite stable till now during the day, and it's up around 0.3%. Let's also quickly pull up the contributors on the Nifty and see what are the counters weighing down on the Nifty and weighing up on the Nifty. There you go. There's ICICI Bank, ITC, HDFC Bank, and Infosys, which are some of the counters that are weighing up the Nifty, and ONGC, Tata Motors, Hindalco, and NTPC are some of the counters that are weighing down on the Nifty. Let's also quickly pull up the breadth of the market and see where the market is skewed towards, whether it's the buyers or the sellers. Well, the market is clearly skewed towards the sellers, where we're seeing roughly 1400 odd declines versus 700 odd advances. So the ratio is 2:1. However, it's skewed towards the sellers. But Harsh, how are the sectors performing in trade today?
Well, yeah, it's a whipsaw kind of a market, at least to start this week off. We're going to quickly pull up sectors first off. 1/3% lower on the Nifty Auto, 1/3% higher on the Nifty Bank. So it's a bit of a mixed trade of sorts there. But look at some of the other big movers. Within the Nifty Bank as well, you're seeing private banks doing better. PSU banks, down almost 1% plus in trade. FMCG, in that sense, switching focus, is doing fairly well in trade, 0.9% higher. You're seeing oil and gas on the other hand, as well as metals taking a bit on the chin, at least in trade today. So you're seeing 1% lower on each of those roughly. You're also seeing a mixed kind of a day with regard to IT, around 0.25% higher. So in terms of support, good support available to the benchmark itself, but the broader markets is where some of the pain seems to be at least, because the advanced decline, as highlighted by Mahima, was fairly balanced in that sense. But let's go to our first management for the day. We have Rohan Shah, Director Finance and Group CFO at Deep Industries. Now, roughly 3,000 crore in terms of market cap for viewer perspective, but a 1,400 crore new order win. Mr. Shah, talk to us about this order, what it entails, and how much revenue on an annualized basis is this likely to generate, because it's a 15-year tenured order. So talk us through a couple of those aspects.
Yeah, we are quite excited on winning this order from ONGC. So this particular contract is for production enhancement of their mature fields. So with this contract, ONGC wishes to increase their hydrocarbon production and to develop further their reserves. So this particular contract can increase the production of mature fields over a period of time. And in that, we can get our service revenue as a share of incremental production.
Right.
Yes, this contract is for almost 15 years, but we are quite confident that we can complete this contract well within time or even before the given timeline.
All right. And Mr. Shah, this is, the first production enhancement and contract that you have, in your basket. So I want to understand that, how do you plan to play this from a long-term perspective? Also, do you expect more such orders going forward?
Yes, so this is for the first time ONGC came up with a production enhancement contract, and this is first round with which ONGC has started this, and we are expecting a few more rounds coming from ONGC itself. And with other PSU clients also, they are coming up with such production enhancement contract. And we believe in this industry, since we are more than 3 decades old, we have a great advantage to get this type of contracts even in future.
Good morning, Mr. Shah. Hika this side. Since this is the first of the, first kind of, project enhancement operation orders, could you kind of give us a margin picture? Because, you do enjoy healthy margins in terms of your other segments. So, first margin profile of such orders, since you expect more to come by, and also the market opportunity in terms of size, if you have some estimate on that.
So margins would be again excellent in this production enhancement contract as well. So as you rightly said, we are operating on good EBITDA margin, more than 40% in our other verticals. And from this particular vertical also, we are expecting a good amount of margin going further. And with regards to opportunity, since it is the first contract we have received, though we were eyeing on this type of opportunities for since last 6-7 months, and we believe adding further such type of contracts will definitely help us in improving not only our top line but also our bottom line.
Okay, Mr. Shah, you suggested that the tenure, while it is 15 years, you're going to execute well within that tenure. What would that timeline be? Sub 10 years or maybe 10 to 12 odd years? Is that how this is expected to play out? And also, if I can understand, on this order alone, what would the incremental margin be like, and therefore will it impact your blended margin, your overall margin?
Yes, so as I said, we are quite confident to execute this contract well within this timeline of 15 years. So our expectation is to complete this contract in range of 10 years itself. And with regards to margin, it will definitely improve our overall margin.
Mr. Shah, so then we want to understand that in terms of quantification, where will your blended margin stand at with respect, in cumulation to this order? So by the end of FY25, first thing, and if you expect that, the timeline for execution of this will be 10 years, including this order, blended margins will stand at what percentage?
See, blended margin exactly would difficult to quantify, but as I said, it will definitely improve our overall blended margin. And since we are confident that we can complete this contract well within timeline and even in time of 10 years, probably it will also add a great amount every year in our top line going further.
Okay, Mr. Shah, with regard to the execution, when does it start? When are you fully prepared to start executing on this?
Yes, so in this type of contract, we would be.
Mr. Shah, sorry, I'm going to interrupt you for a minute. We have live footage coming in from the GST Council meet. Of course, several stocks in focus on the back of this meet. It's going to be a critical one with regard to especially insurance. That's one. And second is with regard to gaming laws on the GST side of things, on the indirect tax on gaming laws. So both of those will likely be in focus. But there you go, some live visuals coming straight to you before we move straight back to Mr. Shah. There you go. We have the Finance Minister, Miss Nirmala Sitharaman, also there, chairing that 54th GST Council meet. Of course, this will be critical for the likes of a Delta Corp, largely flat in trade today, the way I'm seeing it. But nonetheless, that one in focus. You're also seeing that some clarifications on this count could really help the overall picture for someone like a company like Delta Corp. We also have something like a Nazara, which will be in focus, doing fairly well in trade after an acquisition as well, 225 crore acquisition made by Nazara. Zensar Tech also among those which might benefit. But in terms of the insurers, you will have LIC, HDFC Life, ICICI Pru, and the like, who will also get impacted. But Mr. Shah, sorry, apologies for that. We had to cut through for that live visual. But if we can come back to you with regard to how quickly do you expect to start executing on this?
Right. So as per our internal estimate, it will take 9 to 10 months to start revenue out of this particular contract. So we believe revenue from this particular contract will start from next financial year.
Mr. Shah, now in terms of your, overall order book, could you maybe give us a sense in terms of how you expect the entire order book to grow to, as well as the segments where you see, more orders coming in terms of your bidding pipeline? How does it look like right now?
Right. So at the end of Q1, our total order book was standing at around 1,250 crores. And with this single order, it would be doubled, more than doubled. And we believe the growth is coming from all different verticals, including this new vertical of production enhancement contract. So we are expecting few good more contracts coming and will be added to our order book in coming future, probably in next 3 to 6 months. We are expecting good amount of bidding pipeline conversion in our regular business verticals as well.
Also, Mr. Shah, just with regard to your timelines again, you've suggested you'll start extraction from this new well maybe 10 months from now. So how does revenue therefore start to accrue? Will it be linear over the 9 years thereafter, or will you front end some of it, or will it be back ended? How will it work in terms of top line?
See, generally it will start from low and it will have a bell curve type of production. And so it would be then be on peak in immediately 1-2 years. And it will be there for few years, and over a period of time, it will start reducing. So we believe a majority of revenue would be more or less front loaded.
And Mr. Shah, considering the kind of, order wins that you've secured and the kind of growth that you've seen, I want to understand that so FY24, you've roughly done revenue of 427 crore. So from a longer term perspective, I want to understand that by the end of FY26 or 27, where will the revenues be at? What will be the number like? And also the bottom line then?
See, to quantify exact number would be difficult, but we are quite bullish on our growth numbers, and we believe we should grow at least more than 35 to 38% even in FY25, and similar amount of growth we are expecting in FY26 and 27 as well. So, with an opportunity of adding few more such production enhancement contracts in coming future, this growth percentage can even go for higher.
Got it, Mr. Shah. You said 25% growth in the next 2 years. From which segment will this be coming from? How will your margin profile look like? Will we see more focus on natural gas compression and natural gas dehydration, which are your higher margin segments, or is there an optimal mix you're targeting?
Yes, so growth is coming from all different segments, including gas compression, dehydration, and drilling workover. Along with this, we have also entered into different value-added services, one of which is charter hiring of entire gas processing facility, which is again a unique concept introduced by us recently, where we are converting EPC opportunities on charter hiring basis. And that is also a great push which we are expecting for that particular vertical as well. So growth is expected from all different verticals which we are into, and the additional vertical which we are adding with this contract of production enhancement as well. So all put together, we are expecting 35% type of growth.
Okay, and Mr. Shah, so for this particular order win, is there any capex that you're going to plan to do? And if yes, what will that amount be like? And secondly, how will you be funding that capex?
See, we are into this business for more than 3 decades, and we are providing almost all services which are required to increase the production of this particular field. So largely we would be using our own equipment and our own services to increase the production out of this particular field. And if required, we'll do further capex as well. But as of now, it is a little difficult to quantify because this contract would spread over almost 10 years.
All right. Just overall picture, Mr. Shah, I want to get this absolutely right. So you've got a top line of roughly 450 crore currently. You'll likely go to closer to 1200 crore maybe by FY27 at the growth clip that you're expecting, roughly 30-35%. And you'll do a 40% margin on that. Is that the right way to look at this?
Yes, of course. We are gunning for it.
Right. Okay. Very, very interesting. 3,000 crore in terms of market cap and extremely robust in terms of growth. So thank you so much, Mr. Shah. It's been good chatting with you.
Thank you.
Right. Stock on a tear. Let's pull up Deep Industries just to cap this off. Stock up nearly 15+% in trade the last I had checked. If you can pull that up, we'll know exact. There you go. 17.2 odd % higher in trade. That's where Deep Industries currently is at. Very, very large order win, larger than the current order book itself. So that was, of course, Deep Industries. But let's switch focus. We have Ajay Singhania, Managing Director and CEO at Epac Durable, joining us as well. Welcome, Mr. Singhania. Talk to us about both the Q1 overall in the context of the full year FY25, as well as how Q2 is playing along for you.
Yeah, hi, good morning. So see, being a pioneer in air conditioning ODM business, obviously 24 was a subdued year wherein we faced a lot of challenges in terms of the weather uncertainties and timely rains and all. But obviously Q1 25 has been exceptionally well for us. We grew almost 80%. The industry has been growing at almost 35-40% plus. So one of the best times for Epac Durables. And coming to Q2, definitely the growth momentum continues. The market has been responding very well, and India being under-penetrated in terms of AC, we can really feel the heat not only in the climate but also in terms of sales.
Mr. Singhania, you've recently acquired ePower Electricals Private Limited. Now, from what I understand is that it manufactures DC motors, and this is probably, a raw material for what you manufacture. So I want to understand that you will be utilizing this for your own consumption. So I think that this will impact your margins overall, and this could be margin accretive for you. So I want to understand that going forward with this acquisition, will your margins improve, and if yes, by how much?
See, first of all, we have not acquired ePower, so it was 26% Epac and 74% RR Wire. So we have increased our equity from 26 to 50% now. So it's now a 50-50 JV between both the companies. Definitely see the idea behind starting of Epavo and now increasing the shareholding has been that we understand, one, that we'll be utilizing the motors captively for our own consumption. At the same time, we have a large customer base available to supply to. So this would be, I mean, the results would definitely be independent, but it would help us secure the supply chain, reduce our dependence on China further. So that's the whole idea.
Mr. Singhania, good morning, sir. It's Puneet this side. I just wanted to ask on your backward integration currently, you are manufacturing a lot of components for air conditioners currently as well. And you've also commissioned a new plant in Andhra Pradesh for the same. I wanted to understand, within Andhra Pradesh, is it only for room air conditioners or also will include small appliances, which is another segment that you're currently in? And I also wanted to just ask you one key question on components, because PCB is only currently in Bhiwadi facility. Is there any particular reason that you don't have the PCB manufacturing? Because it's going to be one of the most important components going forward for you as well. So just wanted your idea on both these queries. So one's on PCB specifically being in Bhiwadi, and also on the current product lines which are there in the new facility.
So see, coming to the product lines in the Andhra facility, so we started off with the AC as the first product, but at the same time, our manufacturing facilities are fungible in terms we can utilize them to manufacture the small appliances as well. So now in this quarter, we have started putting up facilities for the small appliances as well. And Q3 onwards, we believe that we'll start production of the smaller appliances in the Andhra facility. So it is already in the phrase, so we've been taking a step-by-step approach. So small appliances will start, the mass production would start from end of October onwards, and especially the washing machine which we are launching is going to get manufactured in the Andhra facility first. The second question in terms of the PCBA, so the PCB assembly we started off in our North facility first because we have created enough capacities here. Now, as we are using the same facility to even supply to our Andhra facility, so in phase 2, we will be in a position to put up the PCBA manufacturing even in Andhra. So currently we are utilizing our capacities which we've installed here in the North. So once these capacities get utilized for the North itself, we'll be in a position to invest for the same in the South.
Right, Mr. Singhania, talk to us about revenue contribution going forward. So you're expecting, of course, these new products to start to contribute to revenue. Is H2 the likely expectation, H2 FY25, in a significant fashion? Is that how one can look at it?
So I'll put it this way. Previously, if AC was contributing almost 85% and 15% the other appliances. Now going forward, as we are increasing our footprints in the other appliances, also the large appliances like coolers and washing machines going forward, and as we are growing our portfolio of the small domestic appliances, so this H2 definitely the contribution is going to improve for the other appliances, the non-AC appliances. So I mean, even if I give an outlook for the current year FY25, I'll say AC would be, let's say, 78 and almost 22% from the non-AC business. So this is the way how we are improving our capacity utilization on a H1 and H2 basis.
And how would FY26 mix be like? Because that will be a full year when you'll be doing pretty much all appliances. So just trying to get context there.
So gradually we aspire to bring it down at least 60-40 in terms of AC and non-AC business. But 26 we should definitely be able to achieve, like say 74, 75 and 25, 26. So gradually it will keep on improving.
All right, and Mr. Singhania, in terms of finance costs, you've guided that, finance costs will reduce in Q2 and Q3. So I want to understand that, what is the progress there, and where do you see debt going by the end of FY25?
See, in terms of finance cost, our core focus has been to improve our working capital cycle. So this is where we see a lot of capital getting blocked. So we have already reduced our working capital cycle from almost 90 odd days to 45 days in the last quarter, and we'll gradually keep on improving that. So that's somewhere we have tried to unlock our blocked capital, and this is how we've been able to improve our finance cost as well.
Now, Mr. Singhania,
we don't have now a large exposure in terms of the debt, especially the long-term debt. So it's only working capital which contributes towards our financial cost.
Mr. Singhania, I just wanted to get back to your room and room RAC segment specifically, your air conditioner segment. Now, you have mentioned that you have roughly 24% market share in the ODM segment specifically. Could you quantify specifically what would be the ODM share for your current revenues for say historical for FY24, what would be the total ODM share specifically that you might be getting for room air conditioners? And I also wanted to ask if you have been receiving, are you compliant with PLI benefits for room air conditioners as well? And if yes, have you received anything in FY24?
So firstly, in terms of the RAC market, the overall, let's say the overall RAC market was close to 10 odd millions in the last year. So OEM, ODM put together do almost 35 odd percent. So it could be 35 to 37%. So that means almost 3.5 to 3.7 million units get manufactured by all OEMs, ODMs put together. And we contribute almost 24% of it. So that's in terms of the quantifying the total RAC market in India. For the PLI benefit, so we were one of the top 4 companies to commit the highest investment in PLI. So we committed almost 300 plus crores in PLI from Epac Durable. And we got our PLI benefit for the FY24 and for FY23, sorry. 24, we are on way to achieve it. So hopefully we should get it by end of this year. We are expecting it. So last year in the first year, we already received it. And for the FY24, the amount is close to 30 odd crores, which we should get.
I just had one follow-up, sir, on this particular facility. Now, currently you did mention that, newer segments will also be added. Now, washing machine, one of the key segments which, has caught my eye. I wanted to just understand, because it's not a segment that everybody has entered to, but it has very high growth opportunity, because I think the penetration is still, around 20-25% if I'm not wrong. So I just wanted to understand the opportunity here. And what could be, the margin picture going forward? You have been around, the 6 to 7% range in the last couple of years. Do you see the addition of non-AC components or, the consumer durable business specifically? Because there's a lot of competition in this segment. So just wanted to understand on these two factors.
See, firstly, all the segments we are into, like AC, the lowest penetration is almost 6 to 7%. Different reports claim different thing. And even washing machine is not that high as 24%. So it's like 12 odd percent is the penetration for washing machine. So both the products are on high growth phase, and next 10 to 12 years, definitely every year we'll say they're multiplying, and the forecast is at least 15 odd percent growth year on year for each of the both segments. So definitely, I mean, these are both the high growth thrust area products, and OEM ODM is something very unique, because see, for us, the capability to manufacture AC helps us utilize almost 100% of our capacity during the first half of the year. So for us to improve our margin profile and to improve our asset turn, it is very important that we start focusing on products which are predominantly H2 products. So washing machine is one such product which starts picking up from May onwards till July, August, September. So these typically 4 months help us utilize our capacities better, and definitely then it will help us improve our margins as well. Because we are not making any additional substantial new investments to manufacture washing machines.
Mr. Singhania, one last quick question. Your FY24 revenue did take a 7% hit as compared to FY23. So I want to understand, by the end of FY25, where will your revenues be at? And quickly, even commodity prices are expected to improve. So where will the margins be then?
See, FY25, we are on track to at least clock a growth of anywhere between 45 to 50% growth organically. So we will definitely clock a growth of 45 to 50% plus for this year. And similar growth is what we are working on for the next 2 to 3 years, definitely. So we'll continue our growth journey on the top line and bottom line both. And for the commodity prices, definitely the commodity prices have softened. But at the same time, since we are an OEM ODM, at most of the times we are kind of insulated with any changes in the commodity prices, both upside and downside. So that does not impact us much.
Got it. Okay, thank you so much, Mr. Singhania. It's been a pleasure chatting. We are completely out of time on this edition of the Mid Show. From Puneet, Mahima, myself, everyone who puts the show together, thanks so much for watching. Hope it was productive. Stay tuned to NDTV Profit. More action on the other side.
अगर फूड प्राइसेस ज़्यादा है, हम सिर्फ जिसको कहते हैं कि कोर इन्फ्लेशन कम हो गया, ठीक है, इन्फ्लेशन कम हो गया, अगर वो कहेंगे, वो क्रेडिबल नहीं रहेगा। फिलहाल हमको ये कॉन्फिडेंस है कि इन्फ्लेशन कम हो रहा है और 4% के आसपास पहुंच जाना चाहिए, लेकिन इस साल का एवरेज हमने 4.5% दिया है। यंग इंडियंस आर एस्पिरेशनल, और इसमें कोई गलत चीज़ नहीं है। जब एक कंट्री प्रोग्रेस करता है, जब एजुकेशन लेवल, टेक्नोलॉजी आगे जाता है, तो नेचुरली यंगर पॉपुलेशन जो है they get attracted to other markets. Youngsters are going into stock markets. If youngsters are buying insurance products, if they are buying, investing through mutual funds, it's a good thing. It should happen. Credit growth and credit disbursement has become very fast thanks to technology. लेकिन deposit mobilization जो है आज भी वो physical है. टेक्नोलॉजी जितना बढ़ता जा रहा है, attempts to hack into systems, attempts to do साइबर फ्रॉड्स, दे आर ऑल ग्रोइंग। इसमें हमने बहुत अवेयरनेस क्रिएट किया। हमने अवेयरनेस थ्रू एडवर्टाइजमेंट्स, थ्रू टेलीविज़न, सारे मीडिया जो चैनल है उसमें हमने बहुत एडवर्टाइज किया, लोगों में कॉन्शियसनेस क्रिएट किया।
The 18th of September will be one of the most watched days for global markets. A turning point that could change the course of the financial markets and economies. The big shift is coming.
The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks.
It's not about if, it's about how much. Will the Fed cut rates by 25 basis points or 50 basis points? What will the impact on India be? Catch all the action live on NDTV Profit.
When the whole day passes like a blur, the news just whizzes past, and you're trying to stay informed. It is our job to bring you news that truly matters. At Profit 360, we cut through the clutter, the Wall Street deals, finance and policy news that could shape your tomorrow. The newsmakers, the trendsetters, and the innovators. In 30 minutes, we've got you covered. So stay ahead, stay informed, and stay profitable with Profit 360.
Headlines you start your day with.
Hi, morning. Thanks so much for joining in. You're watching Ask Profit on NDTV Profit. My name is Alex Matthew, and this show gets you answers to all of your stock-related questions. To that end, if you've got questions for us, you can send them to the number on your screen right now. Let's take a look at where the markets are and what's happening in, first, the benchmark indices, of course. And you have the equity markets in India, which opened on a bit of a weak footing based on what we're seeing across the board globally. But we've recovered from the low point of the day. We are treading water at this juncture, just about flat for the benchmark index. And you have the mid cap and the small cap index that are both in the red at this juncture. So you have 0.5% cuts for the mid cap index and cuts of over 1% for the small cap index. So understandably, the breadth is pretty heavily skewed in favor of the declines, or it was actually. It is. It's not giving you actually the correct picture. So the numbers are indicative of one gainer for every 2 declines, and maybe that graph is a little bit wonky as things stand right now. But let's take a look at the key indices, because you have the Nifty Bank that is providing a little bit of support, and in fact it was underperforming today. It was in the red, but it has recovered from the low point of the day, and it is gaining currently about 0.4% or thereabouts. You have IT also that is gaining ground, and you have FMCG, which is standing tall in trade today with gains of about 0.8% or thereabouts. So it's IT, FMCG, banking. Pharma is more or less holding out in terms of not doing too much. And you have the oil and gas space as well as the PSU banking space once again that are losing ground as a pack. Now, we have been talking about Suzlon for quite a bit based on the run it's had since last year, and today it's arguably one of the stocks to focus on because it's gaining about 2%, not tremendous gains, but it has got a significant order, and this is something that we've been talking about for a little while. We've got an announcement has come through today, and Mika is joining you to tell us more about that. India's largest wind energy project. How significant is this though, Mika, in the larger context based on the kind of orders that Suzlon has been winning?
Yeah, it's actually taken, its order book from 3.8 gigawatts just as of the end of June 2024 to over 5 gigawatts. Now, what Suzlon has bagged is an order worth 1,166 megawatts from NTPC Green Energy. And like you mentioned, it is India's largest wind energy order. The company will install a total of 370 wind turbine generators, and this will be the S144 model of the company, which are at a capacity of 3.15 megawatts. Now, this project is to be executed across 3 sites in Gujarat, 2 NTPC renewable energy projects and 1 Indian oil project. And the electricity generated from this project will power around 3 million households as per the press release. Now, when you talk about the revenue potential for Suzlon, well, as per management, the company roughly earns around 6 crores per megawatt of installation. So the revenue potential from this order itself is over 6,900 crores for the company. And like I said, the current order book now is at 5 gigawatts, and it's up 31% from the Q1 FY25 levels. And it's key to note that this wind turbine manufacturing segment contributes around 20 to 23% to Suzlon's total EBITDA, and it is the company is the largest wind turbine generator in India and ranks 5th in terms of global capacity as well.
Important context being provided. Thanks so much, Mika, for joining in as always. Let's also tell you, by the way, that we'll get some more clarity from the management when we speak to them at 12 p.m. today. It's just a short while away. We are speaking with the Chief Executive Officer of the company, JP Chalsani, so you should watch out for that. In the meanwhile, let's talk about how this particular stock ranks in the books of our experts today. We've got Sameer Dalal of Natwarlal and Sons Stockbrokers and Rajesh Palvia, Senior Vice President Technical Research, Technical and Derivatives Research, I should say, at Axis Securities. As always, thank you so much, gentlemen, for taking the time. Sameer, arguably one of the stocks of the last couple of years based on the kind of run that we've had, and what a journey. What do you make of this latest